Executive Finance Committee meeting to order. All members are present, and the certification of open meeting laws requirements been met, Mary?
Yep.
And we have a long item agenda, 27, and looking for an adoption of the agenda.
Second.
Motion and second. All in favor, say aye.
Aye.
Opposed, same sign. Carried. All right. We have, need adoption of the minutes from the previous two meetings, which was July 9th and July 20th. Do we have a motion to adopt those minutes?
Mr. Chair, I move to adopt the agenda from the July 9th meeting, the minutes, from the July 9th meeting, along with the additional meeting.
On July 20th. Motion by Wayland to accept it. Is there a second to that?
Mr. Chair, I'll go ahead and second it.
Who-
I'll second it.
Okay. Second by Todd. All in favor? Any other discussion on that? Issues? If not, all in favor say aye.
Aye.
Opposed, same sign. Carried. All right, public comment period. Mary, would you want to read that?
Sure. Members of the public will have a 15-minute block of time to comment on today's agenda items. Members may be present in person or call in to make such comments. To comment by telephone, please call 715-538-1894. Public comment may be extended or curtailed at the discretion of the committee/board chair and after advisement by the committee/board.
Okay, thank you, Mary. Moving on, item number 6, county sales tax and general fund updates. Handouts were in our packets. Is there, would you like to give us an update on anything, Pam, on that?
Well, I'm very prepared that you want to talk about the handout that's in your packet, or I do actually have a set of draft financials for 2026 if you want those under this agenda item.
I think that's fine.
I'm sorry, my microphone wasn't on.
Sure.
So, Mary, is there anything on the sheet in the packet that you wanted to talk about first? Because she does the sales tax and the fund balance sheet. Or questions about that?
Anything, Mary?
No, I'm sorry. I just we're down a little bit from.
Mr. Chair,
Yes.
I'm just going to make one comment, because now this is based on last year's. Even though we've got our new financials, now there'll be new numbers that Mary will put in for next time, right? Okay. I thought I heard her say that, that's,
And the sales tax revenue was up about 15,000 from where we were last year at this time, I think, correct? What I see?
Yep, 14,664.
Oh, that's total, yes.
Yeah. Month of July was down a little bit compared to last year, but we're
Right.
still up that,
The overall year-to-date is up by that amount.
yeah. All right, any other more conversation on the sales tax or general fund updates? If not, yes. Yeah, please hand that out.
This is through, year-to-date through April, it's a draft. I'm trying to speak loud so it gets on the thing. I have one for the record.
Thank you.
Still had a glitch posting May. Sorry, no. Posting May in UKG, so we're close there. That's why these are through April, the expenditure side. And then we still need to get, with Mary and her folks and the treasurer, cash is not reconciled yet. So there are potentially some entries there that are missing, because I know there's a few offices that still have not entered some of the 2026 entries, which I've talked to them about, asked for a timeline when those will get entered, and then I'll work with Mary and Michelle, and we need to get cash reconciled. But that is not done. That's why I wrote preliminary on here and I wrote draft. But I did promise by August, you would have some sort of financial statement out of the new system. So there you go. Questions?
Mr. Chair, so roughly, tell me if I'm wrong, this should be like a third of the way through the budget by the end of April, correct?
4 months. Mm-hmm.
Yep. So, I mean, they're all not going to be exact, but that you can go by
Right,
kind
right.
of a rough estimate, correct?
And this is a Tyler report. So just to kind of walk you through, you have your original budget as adopted in the first column. If there's any transfers or adjustments, money that's been moved around. So your revised budget, and then you see your year-to-date actuals, which then it tells you the dollars of available budget, and it tells you the percent
Yeah.
used to date. So those are the columns that show on this particular report that I thought was kind of similar to maybe what you've seen in the past and the most useful report out of Tyler. And I can run it separate for revenue, or I can run it combined. They get lengthy. I was thinking that you had seen these expense reports in the past, so I tried to run something I thought was similar to maybe what you'd seen. But there's other things I can run.
So does Tyler let you customize a lot of the reports that go out like that, where you can select different items to put in order?
Not, the report format itself here is standard. I can choose if I want to run all revenues, all expenses, if I want to run it together, if I want to run any one particular program. I mean, you can choose those, but as far as the format of the report, no. We do have a training scheduled, I believe I have it out in November, for all the department heads to do custom reports. For us all to learn how to do custom reports, because that's a training that they didn't have done yet for anybody, so.
Mr. Chair?
Yes.
I was just going to comment that this is exactly how the report used to look like.
Good to hear.
Under the old system, so you did the right one.
Perfect.
Except I was
Thank
going to
you.
ask one question about child support. Did you segregate those by some new program or something, right?
If you look, yeah, you'll see,
I know they zero out, but.
and I have to ask, I have to look at, I didn't look back at what you had in the past, and I was told that when they did the new budget, and in Tyler, maybe some of these funds were broke out. I have to ask, but you'll see Fund 201 is now Public Health, 202 is Human Services, 203 is Senior Services. Those are the three that I was told potentially was broke out, and if you look at them, right now, it appears as though all the budget dollars are in 201, and potentially it wasn't budgeted that way. So I will have to work with Jay to potentially break the budget into the pieces now how the funds were broke out.
Well, this looks like the way it used to be.
Okay, so then I'll have to look
But
at
I
the.
was just going to comment about the child support under the 101s,
Okay,
where you have the transfers adjustments. So that must have been something that got changed to, that actually did get broken out.
yeah, she's got,
Because it's like dedicated, shared, mixed, and
Yes.
cooperative.
are you in fund, which fund, you're in Fund 201?
It'll be on page 1 and 2, the bottom of 1 and top of 2.
Oh, okay, yep, they're not in their own fund. Yes, and I've worked a bit with,
Penny?
it'd be Nancy, right?
Oh, Nancy.
Nancy,
Super,
yeah, and she has asked me questions as far as we've been posting payrolls, how to get everything between, and she's mentioned 54, 330, 331, 332, and 333. And she still has to do some journal entries there, and 334, I think, is in that as well. So I've worked some with her. I know she has some journal entries to clean up how some of the payroll initially posted. Plus, I don't think until they provide services for the month, then she has to allocate payroll accordingly. So she'll have to do some journal entries there. But yes, they did break those, it appears they did break those out into different program codes.
So since the main one, the 54330, has no budget, because everything's broken out, but there's expenses in there, that's probably what she's got to journal out.
Well, she has to journal some actuals as well.
Yeah,
Because
this
you'll
would be
see,
actuals, yeah,
yeah, there's still $30,000 in the main one. I
Yep.
don't know if some of that moves. We'll have to look at the detail with her. And there is some cleanup to do on these financials. Like if you saw the revenue side, some of the missing entries show up over there. There's a few things as you look at the detail that needs some cleanup. I haven't gotten to that step yet.
Mr. Chair. Pam, where's the administration in here?
They are 51430, so on the first page, about a third of the way down.
Oh, okay.
Yep.
Did you used to have the percentages also on the old one?
It said the over and under. Yeah, the available, it didn't have the percentages, yep.
Yeah, the percentage is awesome.
And of course, I'm going to comment now a little more too, because there's a lot of expenses that happen in the first quarter of the year because there's things that get paid out just once a year. And so some of these might look like they're really out of whack, but they're,
Right.
it's because they're probably done for the year
Like the insurance payments and
and
stuff.
stuff like that. Yep.
This is only through April too, so.
And I know one would be libraries, if you went to, let me see if I can find libraries. I don't remember their
I
number.
appreciate these, Mr. Chair, very much. This is nice to see this. If we could get it in our packet, so we could kind of go through it ahead of time, because now it takes so much time to go through it while the meeting's going on. Then we could prepare questions and stuff.
Yep.
But I appreciate this. This is exactly what we were looking for.
It is.
And I appreciate this.
Any other comments, concerns?
This is good.
If not, thanks a lot, Pam, for bringing that forward to us, and we'll look forward to next month and maybe send it in our packet, as Audie mentioned. All right, moving on. Department reports request quarterly update with Register of Deeds Sue Ackerman. Hi, Sue.
Good morning.
Good morning.
So this quarter, we've been working on promoting our property fraud alert. So what that is a service we provide free, and people can sign up, and then they're alerted when anything is recorded in our office in their name. So then if it is a fraudulent document, they can act on it faster. It doesn't prevent fraud, but it allows them to act quicker. And then the other thing is our back indexing. In 2025, we had scanned 64,000 images, and that was about 24,933 documents. So between birth, death, marriage records, miscellaneous, school census and deeds, we did scan some indexes as well, and we're just working on back indexing those as we have time. And then the rest was just the revenue and statistics through the 28th of July, not till the end of the month, because I had to have the report in.
You have a lot of back indexing still to do?
We do, yeah. It takes a lot of time, and it just depends on how our day, how much mail we have, how many counter customers, phone, and in our spare time, then we do the back indexing.
Any questions of Sue?
questions?
Anything else, Sue?
No.
Simple and easy.
There we none, thank you. All right, moving on. Discussion possible action on a resolution to accept donations to the Sheriff's Office, Sheriff Erica Coxling. Do we want to read that resolution first, probably, and then we'll have Erica speak on it?
Whereas per Wisconsin statute 59.52, parentheses 19, a Wisconsin County Board may accept donations on behalf of the county for governmental purposes. Whereas consistent with Trempealeau County Ordinance 2.08, parentheses H, the Trempealeau County Board may accept donations made to the county consistent with an approved donations policy. And the most current Trempealeau County policy requires that donations exceeding $1,000 be approved through a specific procedure, including by resolution and by committee review. Whereas the proposed donation are as follows, with each to specifically allocated to the Trempealeau County Sheriff's Office. Gilbert Brown Foundation, $2,000. Buffalo Trempealeau County Tavern League, $1,500. Ettrick Rod and Gun Club, $2,000. Global Finishing Solutions, $4,985. Whereas the donations are to be used for the badges / K9 / search and rescue programs. Whereas the donations have been reviewed and as required by the donations policy, and no known conflict of interest or prohibition was identified during the review process. Whereas that upon review and consideration of these donations, the county board finds that their acceptance will benefit the public good and will serve as appropriate governmental purpose. Now be it resolved that the Trempealeau County Board of Supervisors shall hereby approve the receipt of these donations for the specific uses consistent with the donations themselves, which shall be deposited into account 101-20-12-52102-462520. Be it further resolved that the Trumpealeau County staff shall take action on these as donations as it otherwise necessary to receive for effectuate their receipt. Introduced by the Law Enforcement Committee. John Austin, Ron Johnson, Kristen Hughesby, Scott Leonard, Andy Parrish, and also approved by Exec Finance Committee, potentially.
All right, thanks, Mary. Somebody want to make a motion to accept this resolution?
I'll make that motion, Mr. Chair.
All right,
I'll second that motion, Mr. Chair.
motion and second. Any other discussion on that? All in favor, say aye. Well, oh, yeah. Before we vote on it.
Before we vote on it, we get to have her speak, right?
I was going to have a skip, yes.
Thank you.
You were standing, otherwise we would have went right through.
Oh, okay. No, I just was up here in case anyone had any questions. We've been doing a lot of demonstrations with our drones and canines, and the community has been very generous, so thank you.
Very nice of these organizations to
Yes.
donate money towards a great fund. It's happened several years in a row, and I hope it continues. Can you kind of fill us in a little bit what you're looking at? I know you say towards the badges, canine. Do you have anything in real mind as to where you want to spend some of this money, or where it'll go?
Yeah, right now, we're expanding the drone program. The goal is to have a drone on each rotation to use on high-risk traffic stops and just have it available, search and rescue, things like that. Kind of the future of law enforcement. Eventually, we'd like to get another canine, so saving money for that. Expanding the badges program. Yeah, training, just wherever,
Sure,
yeah.
great, good. Any other questions of the sheriff? Thank you.
Yeah, thank you.
Thank you.
All right, so we have a motion and a second. And any other questions on it? Hearing none. All in favor of it, say aye. Aye. Opposed, same side. Carried. Thank you. All right. Wage study overview and introduction of Milena Halverson McGrath Consulting. Rebecca, can you hear us?
Yep, I can hear you. Good morning.
Morning, Rebecca.
Thanks. So I'm gonna turn this over pretty quick here to Milena Halverson, who's with McGrath, and we've been working with her. I'll let her introduce herself and give an overview of kind of what we've started on, and we've already started talking about where we compare with as far as counties and community or businesses, and I'll bring up a little comparable listing so that you can take a look at that at the end here. But it's just really been a pleasure to work with Milena. I'll say right from the beginning here. I'm very thankful for her expertise, and I think that she's going to help the county and in several other ways where we've been talking about just a few HR cleanup things that we have, and I know that they'll make some recommendations for us as well in that report. So I'll hand it over to you, Milena. Thanks so much, and good morning to you.
Good morning. Good morning to the committee. My name is Milena Halverson Mays, and I have been with McGrath Human Resources Group now for about 13 years. I live in Chippewa Falls, so I'm just a little bit north of you, and my background is actually in human resources. I spent 15 years at the county level. I was with Chippewa County for a real good period of that time, and I also have some private sector experience as well. So I come with a good, well-rounded understanding of human resources, but specifically to county government in Wisconsin. And I think that everyone in the room, although I cannot see you all will agree with me that counties are some of the most sophisticated and complicated organizations. And, so making sure that your compensation is aligned to the competitive market so that you have qualified workforce to be able to carry out the services that you need to carry out for your citizens is absolutely critical. I've been working, like I said, with McGrath for the past 13 years. So even though McGrath is we are a national firm. We do projects all across the United States. I am the primary individual in Wisconsin, just given what my background is. And then I do also touch upon some of the other states. I would imagine a little bit later in this process, I will be down to see you in person, and I'm absolutely looking forward to that. I do want to cover just a little bit, like Rebecca said, we actually have already started working on this project for you. We met with all of your departments over the course of July 29th and 30th. We had virtual meetings where we brought in each individual department head, and sometimes they even brought some of their leadership team so we could talk through what the services are that each department is providing, just because we know it may not necessarily be the same when we look at other counties, and we ask them to bring a little bit of life to the positions and really help us explain and understand, so that when we go out to the market, we have a better understanding of what we are looking for. So really great conversations with your department directors over those 2 days. Now, starting next week on Monday, we have employees that are going to be completing what's called a position questionnaire. That document is going to give us more in-depth information about what their duties and responsibilities are. The focus is on the position, not necessarily on the employee. And we know that some of your job descriptions are outdated. And so this position questionnaire is going to be critical to make sure that we have accurate information about what the duties and responsibilities of the position are. And this document then is also going to help the county to update job descriptions a little bit later in the process. So that kickoff starts Monday, and we call it a campaign. The employees are going to be spending about 2 weeks going through this exercise. Takes them an hour to 2 hours to do it. And then the supervisors are going to be asked to look at those documents before it comes back to McGrath so that we can start running our analysis on that. So those pieces are underway. The last part of the process that we do need to get started on is that external market conversation. Who are your comparators? Where are we going to go get that market data? Because this is a very data-driven process. In order for me to give meaningful recommendations to the county, one of the pillar pieces that we need is what your competition is paying. And then there are some bigger picture philosophical questions to have with that particular data set. What Rebecca is providing here on the screen is the comparable organizations that we are recommending that the county utilize. And this comparables listing was developed through conversations with your administration, but also with each of your department directors to understand really who their competition is. Where are they losing their human capital to? And I know that you've got a couple really large counties on there that might be making you a little bit nervous, but let me talk about those here in just a moment. When we collect market data, we collect for as many positions as possible. We will, what we do is we collect the minimum, the midpoint, the maximum, and we also want to know how much the actual incumbents in those communities are earning, so that we really have a good understanding of what's happening with your salary ranges against the comparable market. So when we do that, when we run analysis, we're looking for deviations, and these would be, they're what I would call outliers. And certainly, I'm expecting that we might have some outliers that are coming from one of your neighboring counties, because they just did a compensation study and they pushed their wages up significantly, but we need to understand how you are doing against some of those larger communities, because the reality is that you are losing people to them. And when we have that discussion of comparators, one of the things that I like to make sure that the elected officials understand is that our goal here is not necessarily to make you the top pair. Our goal is not to look at just one organization. What we want to do is understand the greater market, and then what we typically will start at is what the average of that is. So some of those bigger counties are not necessarily going to have major swings in our data. Will it influence the data? Yep, probably a little bit, but it's not going to be, it's not, the outcomes are not going to mean that Trempealeau is going to be paying exactly like La Crosse. That is not, we don't anticipate that is going to happen. When we have that market data analysis complete, then what we have to do is have a bigger picture conversation to say, okay, this is what your market is paying. Now, what is it that is going to be affordable and sustainable for Trempealeau County? And that topic then goes into what we call compensation philosophy. Philosophically, are we going to try to position the county to the average? Is there a reason why we might have to lag the average? I can't imagine that we're going to be talking about anything above the average, but that's certainly all three of those are going to be items that we talk about. So this at this point is collecting the data, and I would say no, let's not worry about whether or not these counties are too big. We'll be able to see what kind of influence they are having on your data set, and then we'll be able to talk through that about, all right, now how do we navigate that going forward? The other thing I want to just talk about here real quick, and I think we're going to come back to the comps, I just don't want to lose sight of this, is we are going to be looking at your benefits as well. So that we can give you recommendations on opportunities for you. And the last item that I wanted to talk with you about is your salary structure. We'll likely have some recommendations on your structure, because right now you have positions in upwards of 4 different models. And there are some inherent challenges that come with that, with compensation administration. So you can expect to see some structure recommendations coming out of the study. We know that at this point. So that's kind of a high level overview. I'm going to kind of kick it back over to Rebecca, or if there are questions by the committee.
Very good. Let me just, before we take questions, I'll, in regards to the counties that you're seeing in front of you as far as the comparables, does anyone have any input or questions, or like they wanted to give input on this before we would start gathering, before I should say Milena and her group start gathering information? Otherwise, if you have questions for Milena.
Anybody have any questions?
I'm not hearing anything.
I'm sure we'll have questions later, but as of now, we don't have any. Just a good comparative group of counties.
Very good, thank you.
Good to meet you all. Thank you.
Thank you, Milena.
You're welcome. Have a good day. Good day and have a good weekend.
You too, thanks.
All right. Any more questions on that? If not, we will. Rebecca, do you have anything more to add or to that? No. Okay. You'll keep us updated probably next month where we're at with it?
Yep, we'll just keep doing this and giving you an update. I mean, what Milena was saying is we've been heavily involved in working together with her already, and have had a number of we met with all department heads. It's been good. And yep, so I'll keep you posted though.
Real good. All right, thank you. Item number 10, discussion possible action on a RFP template. And Corp Counsel Susan?
Thank you. Within your packet, you should have received an RFP template. I have an extra copy here in case somebody wants one in person. This is something that the procurement group has been working on for several months. If you may recall, we've talked about the procurement group previously. It started from the department head meeting, but from there, some of the larger departments that have the most fiscal issues and those who are most directly involved with fiscally related matters have been meeting once a month for pretty much all of this year. And we're working to update our policies. And just as a side note, the public bidding numbers have increased. The statute that is applicable for public works was amended earlier this spring, so that will be also incorporated into it. This RFP is essentially a template, and I don't know, I can see online that there's highlighting within the template. That's where it's gonna need to be customized by the user. And eventually, we hope to have those to be almost boxes that the department head, fiscal person, whoever it is that's completing it, can use those. But right now, those are being highlighted, so you know that that's gonna be tailored. You know, those are things that are gonna have to be modified by whoever's completing this. Obviously, the date, time, the scope of the project description, contractor duties, and so forth will have to be amended a little bit for each one. The goal of this is to provide a uniform field for all departments that are doing any sort of bidding. It also makes sure that we are consistent with our terms, that we are incorporating all the terms that we need to. Just with any sort of contractual document or document like this, I do recommend annual review of it, because I think there are always things that come up during the year that, hey, maybe, you know, this person asked this question, we should talk about tailoring this or whatever it might be. So this is not something that would be forever set in stone, but this is something to really start making us more consistent, and we don't have this right now. One other thing that I don't think I've mentioned so far is that our hope is that we will provide training to those that are going to be completing this. So once we have an approved template, we're going to meet with the department heads, and then if there's anybody who they want to include on how to use this document. And this will be part of the larger procurement policy updates. So right now, I'm just looking for approval, and of course, if you have any questions, but approval today, and then, so we can start discussing this with the department heads, that this is the approved version to use. So, there's a lot there. I don't know if you have any questions, though.
At what level does the need for the template kick in as far as for procurement? Is it every item, or is it?
That's a really good question.
Just checking to see what it.
So our current purchasing policy has a threshold of $10,000, which I do believe is a little bit low. We need to update it. As I mentioned earlier, too, that the public works statute has changed. That just changed in April, and I want to say right now, well, there's some stepped thresholds depending on it is, but our numbers are very low in that regard too, with the updated statute.
Do you guys have a recommendation as far as this idea, what level we would put it at?
Yes,
Okay.
we're working on that, but we
All right.
will. We'll have
Excellent.
that and incorporate the statutory change.
This is a good thing.
Thank you.
Thank you.
So basically, you want a motion to move forward.
Yes, that this is approved. We'll keep, working on the policies. Next month, I believe, is my quarterly report, so I'll talk a little bit more about that then. We have a whole range of identified issues that we want to work through. This is part of it, and we'll keep bringing them forward as we can, and when we can bring a collective package, we'll do that as well.
Mr. Chair?
Yes.
I would move to support continuation on the RFP template so that we can continue having a professionally done document and have our requests at the level that we are needed.
We have a motion by Whalen. Do we have a second to that?
I'll second it, and thanks, Susan, for getting this going. Thank you.
Really looks good.
Second by Becker.
you.
Any other discussion? Questions? Thoughts? Hearing none, all in favor say aye.
Aye.
Opposed, same sign. Carried. Thank you, Susan.
Thank you, and the procurement task force also very much assisted with this, or procurement group.
All right. Discussion possible action on statement of economic interest. Back to you.
Yeah, thank you. I had sent this one out. This is a continuation of what we discussed last year. If you can recall, November, the county board voted to approve a code of conduct. We also voted for a code of ethics. In November, before the executive finance, I talked about this type of document, that counties generally have it. We don't have it. There's a need for it. And so this is just a continuation of that process. I am seeing things that I think it would be helpful to keep discussing, just a very public need to educate more on what is a conflict of interest and so forth. There is, to discuss the document a little bit more, there is an explanatory part to the document explaining what is a conflict of interest, what are the 6 types of conflicts that are under our ordinance. Of course, there's references to state law as well as our ordinance. You know, for example, it is prohibited for state and local officials to receive anything of value, whether it's through your public office or your public position, outside of basic, you know, pay, or reimbursement for expenses. There's a reiteration that anything of value is $20 or more, including the cumulative amount of that. This document is to be completed by supervisors, so county board supervisors, as well as department heads and any senior management. It's to be completed to the best of each person's knowledge. It does not ask for private or confidential information. That is certainly not something that is wanted through this. Because as with any document, I can't guarantee 100% where it's going to go after it is executed and disclosed. So there's the explanation part, and then on the second part is the actual statement. That is something that for this year, it's to be completed if it's approved, no later than September 30th. Then after that, January 30th of every year. But if people are seeking elective office and they are new, they would need to submit it the end of the business day prior to the last day of filing nomination paperwork. It's returned to Corporation Counsel's office. It does require reviewing the specific ethics code as well as the code of conduct and Wisconsin statute 1959 before it's completed. And then if there's any change during the course of the reporting period, the onus is on the person to make sure that they update the process, update the form. As a matter of process, this is something that if it's approved here, it will go to PB and then to the full county board. This particular document has several aspects. It has a fair amount of questions. I do think that it would be appropriate.
Were you sending this one out?
I sent this one out to the committee because I was running later, and it's a public document. I mean, this form is public as well.
It wasn't in the packet.
No.
It's in a separate email.
It's,
It was a separate email.
and I do believe I have an extra copy if somebody needs an extra copy, so. I would request that there's a slight modification to this and that there is an inclusion of a statement on whether anybody has any incompatible employment or source of income. But other than that, I certainly would welcome any questions you have, any additions, and I would also ask for your consideration for that modification too.
Susan, is this the one that we have to suspend the rule just
Yes.
to allow us to discuss and bring the motion forward?
Yes, and so for those who are out in the public and so forth, so if this is adopted, because this affects the county board, and arguably, it's not tied to the standing rules, it's not part of 202, but it could be argued to be part of 202, just as out of caution, I would ask that there's a suspension of the current rules because our ordinance in 205-8A5 says that this only can be reviewed every other year. Well, that's not practical for many reasons. So I'm asking for that specific rule to review it on odd-numbered years to be suspended so that we can continue this conversation that we started in 2025.
Would it be appropriate to do it now before we get into discussions then?
Yes, I think that's
Mr.
good.
Chair, I move to suspend the rule that we only evaluate policy in this situation in the odd years. And to suspend, we can't debate, there's no amend and a 2/3 vote.
All right, we need a second on that.
Yes.
I will second that, Mr. Chair.
Second by Severson. So we have a motion and a second on that. Any other discussion on suspension of the rules?
There's no discussion, there's no amendment.
None.
And then basically the vote's got to be mechanical so that we know it's a 2/3 majority.
All right.
Andy Todd,
Yes.
Richard Anderson.
Yes.
Robert Becker,
Yes.
Paul Severson,
Yes.
Kevin Whalen,
Yes.
5-0.
5-0 passed. Thank you.
Thank you. And just so that people are aware of it as well, and I've mentioned this at other meetings, we need to do an ordinance update. That would be part of it as well, so that we can continue to do it, review these issues as we need to, or put a different mechanism that they're reviewed annually, not every 2 years. And with all of that, are there any questions about this, about the form, about the process?
Nothing.
Okay. Any concerns about including a question about, and it would just be for the person completing it, because at that point, it doesn't matter about their family. Do you have any incompatible employment or source of income? As I would move, that would be question 13, and the current question 13 would be moved to 14.
Give an example on that.
You know, I'm going to use myself for that. My sole client is Trempealeau County, and at times, depending on the duty that I have, the interests of the public. If I were representing, if I were engaged in private practice of law, and I had perhaps maybe a divorce action, and I needed to be in both cases of, here I'm representing perhaps a petitioner in divorce, and I'm also representing the child support agency to calculate, that would be incompatible.
Makes sense.
So that would be an example.
Good. Thank you.
There are others, depending on the role. And so I would request, if that's acceptable, that there's a modification to the form.
I think we voted on that, to pass that.
We've suspended the rules, now we need a main motion and second as far as to move the resolution on the statement of economic interest.
Do we have a motion for that?
I'll make a motion.
I'll second that motion.
Motion and second. Any other discussion on that?
Yeah. And if I may, I had asked for the amendment to include that incompatible employment.
Yes,
Okay.
correct?
You're making a motion, please.
I didn't, he did.
I did.
I did, yeah.
You included that.
I was just going to make one comment, because that's one thing I checked out beforehand, because I'm also on the Board of Directors for the Grandview Nursing Home in Blair, and then being on the Healthcare Center Board of Trustees, I wanted to make sure that wasn't a conflict, and it wasn't. So this is a good thing.
And I think this needs to go to the full board, because it's everybody, so would be no reason for us not to pass it here, just so everybody else can have discussion.
That'll be on the next county board meeting.
Perfect.
Agenda. Any other discussion? If not, all in favor say aye.
Aye.
Opposed, same sign. Carried.
Thank you.
All right. Housing and Child Care Task Force update. Rebecca, are you on?
Yep, very quick update. Just wanted to let you know, again, we met in, what are we now? Met in July, and so the task now that we're at is taking all the information on the meetings that we've been talking about and learning about other opportunities that other counties have put into place for housing and childcare. And then our groups are breaking out and talking about what might work in this county. And so they did that at the July meeting. It was a lengthy discussion, and so they'll come back and flip-flop whichever discussion they were a part of the last session. They'll move to talking about childcare or housing opposite, and again, putting all of that together so that we can put some suggestions for programs that might come forward here in the county. So that's where we're at right now. Just wanted to give you that update.
All right. Any questions of Administrator?
It was a good, I was at that meeting, and it was really interesting to hear what other cities are doing to promote housing and development. And there was a lot of good ideas out there, and it was a very constructive meeting, I thought.
Any other comments? If not, thank you, Rebecca. All right, number 13, discussion on department reclassification request and recommendations. Back to you again.
So this is where we are kind of in the process of that timeline that I sent you, the budget timeline and what we've done in years past as well, where I have reached out to department heads asking for new position requests as well as reclassifications. You've seen the new position requests because that came to you in the budget survey. The reclassifications were brought forward as well, and so now I'm just bringing those forward as an informational piece for you, and this will go to the Personnel Bargaining Committee as well. And what happens is then as we look at how we can possibly, at least in the past, we could build that in if there were needed changes into our budget. This year, because we have McGrath working on the wage study, I'll just start with saying it's my overall recommendation that these are used for informational purposes, that department heads feel like maybe their employees are behind, or they've reached out to other areas and asked and have a little bit of information. I think what will be
I can't find it.
what I appreciate coming from McGrath is that they'll really be able to take a look at some of these requests in making sure that we're looking at all of those counties that we had that we're comparing to. So let's take a look. Whoops, sorry, this is the wrong one. Are you able to see this PowerPoint?
Yes.
Okay. Oops. Backwards. Oh, shoot.
This wasn't sent to us in our packet, correct?
No.
No, it wasn't. This is just an overview, and I'll send it to you after, but it goes to the PB committee as well. So overview, registered deeds is requesting that the chief deputy is changed in grade, as well as the deputy registered deeds. Her explanation, again, this is what's coming from department heads. So I am not recommending or saying that I am in agreement with this. I'm just sharing this is what department heads are sharing. Sure. They believe there's expanded leadership, training, documentation, operational responsibilities happening in that office. It supports succession planning and institutional knowledge. It improves retention and continuity of service, as well as Sue has shared that she's done a comparison of other deputies in the treasurer's office, clerk of court, and so in comparison, those deputies are in this grade range, and so she's asking to be putting her staff in the same level. I guess it goes back to the wage study and McGrath looking at the duties that are in each of those offices and the level of decision making that those individuals are doing. So it's more than, I'll just say, because of some of these things possibly, but again, I think that'll be a good recognition through looking at other comparable counties. The bottom line, recognizing positions that have evolved beyond their original scope. Let's go into child support. We did do a reclassification of a lot of these positions not too long ago. So again, I think it will be important to take a look at other related counties and comparables. But when you're looking at these reclassifications, the one piece in child support is that 66% of the wages and fringe benefits are reimbursed by the state, so there's less impact on the county. Again, from the director there, the 7 classification requests recognize expanded responsibilities. They strengthen recruitment opportunities, retention, support succession planning, help maintain high quality child support services while leveraging significant state reimbursement. So next, we had a request from the judge's office. This was actually a request last year because of compression issues. And if you remember from last year, I talked about, we did review the wages of some other areas and looking at clerk of courts, and those were low compared to into our comparables. And so that was the recommendation to bring those up. Consequently, then it creates compression. So I looked at these positions and they are all within the average range of our comparables. So I had expressed that I was not interested in trying to work on the compression issue because that could very well open up the whole county to looking at that. We don't have the capacity to do that. So anyway, it was stated at that time that I would be, this would be looked at during the wage study rather than through our own internal work. So, but anyway, the purpose here is compression is to keep compensation, maintaining that across every department. Information technology, the director Robertson has requested that all 3 positions of the systems and security administrator positions be moved in their grades. As you know, there are a lot of new cybersecurity and infrastructure things that they're dealing with. It is a critical role to the county. Again, it will be just important to be able to take a look at what's happening across the area as far as these wages go. Health and Human Services, there's just one position here listed where the Birth to 3 program coordinator change, or leadership responsibilities are transferred from the supervisor to this position. And again, that's why Melena's now doing job descriptions, getting input from people so that she can take a look at all of this as far as job responsibilities. In the sheriff's office, the administrative clerk and the administrative assistant, in changing them, their duties actually have changed as far as their job descriptions. They are doing a lot more records management responsibilities that are much more technical and specialized. Again, will be helpful to have the wage study to look at this. And then the treasurer's office, moving the chief deputy treasurer. Again, the responsibilities have changed because of the Tyler financial system and the new tax system. We want to look to across all counties to, while the responsibilities have changed, some things have been taken away or streamlined as well. So anyway, through the wage study, we'll get a better idea of comparables. Here it is in a one sheet. And again, this is just for information, nothing to act on. It's just to let you know this has been brought forward. I think it's important to have our directors, looking, talking to others and weighing in on this. But in the end, of course, you have, the ability to decide on that. And to me, at this point, my recommendation is we just take these and continue to look at this, these issues that have been brought forward through the wage study.
All right, thank you, Rebecca. Any questions on that?
Yeah,
Go ahead.
yeah, I think before we even consider anything, we'll look at them, but I want to see the effect of the increases, what it would do on everyone's budget, how it would affect our overall budget. To even think about doing any of these reclasses. There's 20 different, and that's 20 different reclasses. That's a lot. And the judge's one, does he not? You should remind him that we got to come up with, in 2 years, we got to come up with a whole new group for him for the second judge. So that's going to be an impact on our budget too. So we have to kind of watch the budget now because that's going to be a heck of an increase. That's going to be put on the taxpayers. But,
If
yeah, I'd
I
like
could
to see
just
it
say,
comparable.
I mean,
Sorry,
yeah,
go ahead.
and I think it's really a valid point, and so that's why I do think it's really important we wait overall for the whole wage study, because we are looking at all wages across the board, and not just certain positions. So, and then what is doable is certainly going to be your biggest question this year, and that leads into further discussion that we have further down on the agenda. Before you read number 14, could I just ask, but if we're done with 13, I just have to make a comment about 14.
Any other questions on 13 of Rebecca? If not, go ahead.
Okay, I just wanted to ask, I had talked to Sheehan Hediger and Vanessa Kane from Baker Tilly. They were going to be in person at the meeting, and I'm not sure if they're there. Are they in the room?
Not yet.
Okay, I would ask, I had told them I thought 9 o'clock, but I wasn't sure if it would be 9:30. They appreciated a little extra time in order to get it at the meeting. They wanted to attend in person. So if you are okay with moving number 14 to the end of the agenda.
Yes, we can do that.
Thank you.
Do you want it at the end or before the closed session?
Well, it'd be before the closed session.
Mm-hmm.
Yes.
Yes.
We'll move that to before the closed session. Yeah, or when they arrive. As soon as we're done with what we're speaking on. Yeah, we could do that. All right. Let's move on to number 15, then discussion on county administrator 360 performance review of survey questions and distribution plan.
So I have a handout there of a paper copy. I don't know if you have that yet, but if Pam could otherwise hand that out. That is the performance review questions that were used the last time in the 360 review. My contract does state that we need to go through this in September. So as done previously, I've already talked to department heads and would send this out after this goes to PB as well for their review. And then to department heads and to all county board members again. So it's really just to share with you at this point, so you can take a look, and if you have questions to get back to me, and it'll go to PB next week.
Any questions on the evaluation?
The due date of Monday, January 27th, that's on the
Yeah.
second page,
I
that's
seen that.
not something we look at, right?
Correct. I didn't update that yet. Obviously, I didn't look at that. So thank you for pointing it out, though. I'll take a look at that.
I just checking, 'cause
Update that.
I procrastinate as much as I can without encouragement.
I think maybe once PB takes a look at it next week, then we can put, in that conversation, we can talk more about the dates of due dates on there.
All right, thank you.
Thanks for bringing it up.
Good catch on that. Okay, I think we'll go back to number 14. The auditors are here. Discussion possible action on 2025 Baker Tilly audit update. And Rebecca and Pam, do you want to introduce our auditors, or they want to come up?
Yeah, I'll let Pam step in too, but I'll just, I've been talking with Sheehan about the audit report. This is to go through that today. I think I'll let Sheehan and Vanessa really cover everything. I do have a couple of added documents that Pam has printed out for you as well that we can we can move to as the conversation goes, but I'll introduce and just invite Sheehan and Vanessa to take over.
All right.
All right, I'm gonna give you guys a copy of the handout. I'll go through quickly.
Thank you.
I think so.
One extra. Perfect. All right, we good here? Is red on or off? Okay, thank you. All right. Well, thank you for having us this morning. I am Sheehan Hediger, the principal overseeing the county's annual audit. With me, I have Vanessa Kane, senior manager, who's been very involved every year, but especially this year as well. So we do have the two reports that were issued July 31st. So I think I saw them as I was handing them out. You have the financial statement document, and then your reporting and insights from the audit. We conducted our fieldwork from May, June, and July this year. As mentioned, we issued the reports at the end of July, meeting the county's Tax 16 deadline. We will have one more report to issue for 2025, and that's the report on federal and state awards. That's due at the end of September, so we'll be continuing to work through that and finish that one up. To start off, I will go over the independent auditor's report within the financial statement document. This is pages 1 through 3. This is really the only 3 pages of the financial statements that are ours as the auditor. The rest of the document is that of the counties. So for 2025, we did issue an unmodified opinion. What that means is a clean opinion. It's the highest level you can receive, meaning that we found the financial statements to be materially correct. They were presented fairly in respect of GAAP. Our audit does not include, or our audit procedures do not include the healthcare center and the county farm. Those are audited by a different firm. We do collect those reports and incorporate them into the county's full audit, so the numbers reflected in here do have those. But as the paragraph within the opinion does state that, we rely on those other auditor numbers. And then within the opinion, we also have the responsibilities of management. So you as the county's responsibility for the financial statements is to prepare and present them fairly. Now, you do hire us to put the document together, to prepare the financial statements, but ultimately management takes responsibility for the information. So we do provide drafts, we provide all of the adjustments for your review, and then ultimately taking responsibility. Page 2 then has the auditor's responsibility for the financial statements. So our responsibility is to plan and prepare an audit based on risk assessment procedures, what we feel is the risk of material misstatement of the financials, and then we perform our tests over those areas. We obtain an understanding of the internal controls relevant to financial reporting. We evaluate the appropriateness of the accounting policies, and then we conclude whether there are any conditions or events that raise substantial doubt about the county's ability to continue into the future. So those are all detailed in those first 3 pages. Feel free to read them at your leisure. I have this two-page handout I just provided that goes over some of the highlights of the numbers. I'm going to, I'll probably get to those second. I'm going to go first jump over to this reporting and insights letter to keep talking through kind of the results of the audit process. So this is the one that has the blue cover. This letter is for the board and management only. It does not get dispersed, publicly or to any other agencies. And it's really the overview of the audit process and our findings for the year. So the first, page 3 is more of those auditor responsibilities, just gives a little bit more detail about what those items are that I mentioned. But the page I want to start and highlight on is page 6. So we have our internal control matters. So these are the items that we found to be a material weakness or significant deficiency for the county for 2025. There are different factors that lead to which classification we have, but for 2025, we did find that there were 3 material weaknesses over the financial reporting process. The first being the financial statement close process. This one you've seen for several years. It relates to, again, us as your auditors preparing financial statements. We have identified material misstatements needed to the records. We put together the schedule of expenditures of federal and state awards. So essentially, not having a team of CPAs on staff, most local governments rely on their auditors to perform these procedures. So that one's required to be reported to you. And like I said, same as it has been for several years. This year, we did have 2 new material weaknesses identified. The first being over lack of account reconciliations. Again, you can read the details in here, but essentially we found that the cash and investment accounts for the county had not been reconciled timely. Timely can be somewhat subjective, but typically not more than a month or 2 after month close would be the ideal timing for reconciling accounts. We found that for 2025, no months were reconciled until April of 26, so well after year end even. And then the tax settlements, we found to have multiple errors within that process, stemming from the initial input of the apportionment amounts, going all the way to the August settlements being incorrect. And I think you're all aware, the county did correct some of that when August settlements went out, and then corrections were made in September of 25. But by the time we came in May of 26, we still found a number of errors and helped the county through correcting those. So those are the 2 additional items noted for this year. Yeah, I get back to the account reconciliations point. I mentioned the cash and investment accounts. There also are other balance sheet accounts that should be reconciled. So, accounts receivables, payables, capital asset records, just making sure all of that is accurate. And the more timely you can do it, the more accurate you can have for your financial reporting. So yeah, that was not solely on the cash and investments. It also pertained to these other account types. All right. Moving on then in this letter, starting on page 9, we have our required communications. So these are things that we have to report to you as the governing body. As far as accounting policies, there was one new GASB for 2025. GASB 102, and it really focused on disclosures of constraints or concentrations of the government. We didn't find anything county-wise that impacted, but the healthcare center did have some disclosures within their financial statements that we brought into here, but nothing that required disclosure on the county portion. The significant accounting estimates that we've identified are the net pension asset and liability and deferrals, the self-insurance, workers' comp, and depreciation over your capital assets. All right, and then every year, if there are any significant unusual transactions, any significant difficulties encountered during the audit, disagreements with management, any consultations outside of our audit team about, particular accounting matters, we have to disclose all of those to you. We did not encounter any of those, other than we did make mention of some difficulties during this audit, really surrounding, again, reconciling that general ledger accounts. Several of the cash and tax-related accounts needed significant time from our side to complete those. So while we ultimately did issue the reports on time, and the county is sitting in good shape with meeting deadlines, the amount of senior manager and principal time needed into the audit this year was significantly more than previous years. Right.
Is that a polite way of saying it's going to cost us more for the audit this year? That
is a polite way, yes.
That was
yeah.
a great way to put it.
Yes, there was additional time, for sure. Right.
I wouldn't say it would cost more for the audit because the procedures are very similar. It's the accounting assistance and preparation.
Can you turn on your microphone, please?
Sorry.
Oh, sorry, Becky. I just said the audit is not the one that costs more just because procedures are relatively the same. It's the accounting assistance and bookkeeping time. That's the difference there.
And I thought that was I knew that was going to take more because of all the incidences that we had during the last year, so
Yeah.
it was more of a joke than it was.
All right. Page 13, we have some committee resources. You can go out on our website. We do more than just audits. So if anything else would come about that the county was interested in looking at, I kind of put a plug here on the succession planning portion. Some of that would have, looking back, would have been helpful to alleviate some of these issues that came about this year. But just things to look forward to, and if there's ever, projects that the county is thinking of undertaking and not sure where to turn, we're happy to help provide resources or at least guide you in the right directions. All right, we have our management representation letter, which is, again, you as the county taking responsibility for these financial statements. To page 24, looking at some of the accounting changes, the GASBs that are coming down the road. For 2026, we will have two, GASBs 103 and 104. We do expect 103 to have some significant changes or significant efforts to implement, both in the enterprise funds, so your highway, healthcare center, and farm financial statement schedules will have some changes in how the presentation of operating versus non-operating items come in. And then there's some disclosures within the required supplementary information, some budget to actual things that could potentially change. But we will work with management and finance to make sure that everything is accounted for properly and displayed right for the financials. So those are just some informational points about that. We then have the list of journal entries that were made in the year. For the next several pages, you could see we ended up with about 71 adjustments in the year. There are a few gaps in the numbers, so it's not quite that, maybe more like 65, but quite a few adjustments needed to the records. And then the last 3 pages, starting on page 43, the two-way audit communications. This is the look forward to the next audit, goes over the nature, scope, and timing. And page 44 gives a list of questions that, you might want to ponder, and if there's any of those items that you feel we as the auditors should know about going into the next audit, we're happy to have conversations, throughout the year. Things don't have to just wait for audit time. So if you have any, concerns or significant things that come up during the year, feel free to let us know. And both mine and Vanessa's contact information is at the start of this letter on the executive summary page. So if you're ever looking for that, you do have that handy.
Any questions on that letter?
I think maybe you're going to go over the financial statement highlights next, then I would assume.
Yep.
Maybe just on the conversation that you brought up here is a good time to talk about the two handouts that you have. You've seen this information before, but I thought it would be helpful in kind of, again, putting it into the broader conversation about what Sheehan has talked about and shared, and that succession planning is very important, and that was brought forward to you last year in talking about how there was the recommendation to start a finance office, a business office, and that there was a severe lack of auditing and people that were capable of taking over and filling Paul's shoes and taking it actually to the next level where we have someone in-house that can oversee all financial functions, plus save us the funding in the meantime on what we have had in the past is a high audit cost. If you take a look at the audit information, this is an overview of a lot of the counties in the area and across the state.
Rebecca,
And their audit costs.
Do you want me, I haven't
Can you
handed
see
these
that?
out. Do you want me to hand out what you gave me that you're
Yes.
showing? Okay, I'll go ahead and do.
Yes,
Thanks, sorry to
please.
interrupt.
Okay, and so these are the audit costs across these counties. As you can see, even in 23 and 24, our audit costs are significantly higher. And maybe, Sheehan, you can talk to that, why we had, when you bring in a finance director, that individual is going to be managing a lot of the auditing piece that Baker Tilly is doing for us now, essentially saving us. Is that correct, Sheehan?
Yes, that's correct. So the fees that you're showing, again, to Vanessa's point, those are not all the audit fee. Those include, the bookkeeping and the additional accounting assistance, the added meetings that we had, this past year of coming down and meeting with departments. So I'm assuming that number is everything you've paid Baker Tilly in those years. And so that, again, I don't know what the other county numbers include, if those are only the audit fees. But if we were talking just audit fees, you'd be much more in line with kind of what these other counties are showing. So yes, to
Right,
that point,
because-
if you had somebody who was taking care of all of the bookkeeping and having the records in organized order, yes, your fees would be less from Baker Tilly.
And that's the expertise that Pam brings. So that's just the point. And I wanted to share, and then there's the other piece that is a handout as well, because we had an update from the one county that we were wondering where that one county was as far as their financials. That has been changed on the sheet that you received from the last time. So I just wanted to update that so you have that again on where financials are being managed in counties. And again, broadly, you see either those are out, the financials are out of the clerk's office. Not that they're not a part of that financial team, but again, you bring in a finance director to manage much more of the day-to-day, like Sheehan's talking about, which essentially should save us. That's the expert viewpoint from multiple sources, at least. that we should see a significant, and even, I think if Pam would speak to that, maybe you could step in right there, Pam, and talk about what you bring to the table as far as this whole process.
Well, I guess what I can speak to is if you go back to that sheet that has the audit fees, there's one county I can particularly speak to, and that solely is audit fees, and the auditors did not provide any additional services, so that is the total paid to their auditors. And that would be Pepin County, because they did have a finance director who did the rest.
Did they prepare financial statements and everything for them?
They did, they could, and in the end, with regards to financial statements, it was much more efficient to let the auditors do it because they prepare however many clients auditors have per year to prepare the same statements. They had the capability to, but to keep up with the gap and all that and all the technical, the technical pieces of it to keep up with that and all the changes every year, it's more efficient and cost-effective for the auditors to do it, but the finance director did have the capability if they indeed wanted the time spent
Yeah.
in that
And-
area.
And to that point, that weakness can be eliminated, even if the auditors are preparing the financial statements, if we've determined that you have the skills, knowledge, experience, the capabilities to prepare one, and you're doing it more as a convenience of having the auditors prepare, that would go away. And I would say that's the common route, is you still would have the auditors prepare it, because you might save a couple $1,000s on your audit fee by doing them yourselves, but the level of auditing that needs to be done over them is pretty similar, whether we prepare them or their client prepared.
Plus, for someone to do them once a year and do all the research and keep up to date, it would take an immense amount of time versus the efficiency of an auditor preparing multiples of them per year, so.
Well, while we're on this sheet here, I've got a question. So in 2023, the county spent $119,789, correct? In 2024, it was $117,930, and 2025, $169,116. And comparable sizes within the state of Wisconsin, looking here, is $55,000 to $65,000. Do these counties, do you know whether or not they have a financial manager, or? Yeah.
Yeah, that would be the other sheet that
Oh, I didn't see
Rebecca
that one.
provided for you, so you can see.
Oh, I didn't see that, okay.
Yeah, and I would like to speak on, it's not necessarily just the financial manager, it's also like the finance department. I'm not good at talking loud. It is having, a well-trained staff specifically to finance and having the roles and responsibilities laid out for preparing all of the items. But as Pam was talking about, Pepin, that preparation side, being with the auditor, doesn't say that, like schedules, reconciliations, all of those things, your capital assets are being managed by management and the finance department versus the audit. That's a lot of that responsibility taking and reducing fees. In addition to that, I'm looking over the list, and I know, like firsthand experience with some of these, like they have 1 to 3 audit entries a year. So the amount of bookkeeping work is not there versus here where it was 70 or between 60 and 70, and that's higher this year, but relevant. And that just speaks.
What was it previous? What was it previous? I would say in
Prior to
23 and
this year?
24, even 23 and 24.
I would say between 35 and 45 probably. And more standard.
Thank you.
So it's one thing to have an entry that we make for convenience yearly, and we know kind of how things go, and everything's set up, we just make the entry, versus kind of the additional investigation and calculation going into things that kind of happen during the year that are unusual or just a lot to do with the situation that occurred, so. But yes, so just talking about like the journal entries versus accounting assistants, all of that. And then, yeah, just having trained staff and people that you are, or who are preparing those schedules and things for us, so that the audit is auditing your records versus helping you to prepare those records.
Well, I'd like to also bring up too is the idea of one, Tyler is going to change a lot of things. I mean, because all these entries are going to be done throughout the whole year and everything's going to be reconciled every month, hopefully every at least 2 months, kind of a deal. And number two, with the research I found too, for the treasurer's office and for all the municipalities that are out there, with that new system they got, which you guys probably are aware of, it doesn't allow mistakes. So if there's a mistake, they can't move forward when it comes to that. So, and then there's also a program in that program, because of what happened in 2025 with Ettrick having some, people leaving and so on and so forth. Within that program, what happens is from the municipalities to here, they enter everything and it comes directly to us. So there's no mistakes. If there's a mistake, if you hit a button, it's going to say no. If you create a report, you can actually take this report and put it into a, what would you say, just a trial. It's where you take this report, okay, this is what came through, put it over here, hit send. It's going to tell you your errors. You can make those changes to your real report. Once those are done, you send it and it's completed. So there's a lot of error issues removed when it comes to what's going to happen in that treasurer's office. So I think that's going to make a huge difference too. So I think we're going the right direction when it comes to, what we're doing. It's going to eliminate those fees.
Yeah. And I guess just one more point I want to make on the fees that you're displaying here. Again, I don't know what is all encompassed in the other counties, but for Trempealeau County, we also prepare the annual highway compilation. Again, several entries needed there. It's getting better, I think, but this year proved some difficulties with system changes and such. So I don't know how many counties have their auditors do their highway report. I just don't know, so I can't speak to that if that's comparable. We provide budgeting assistance in the fall, so that's some additional. And then we've been doing the municipal report Form A in May to do that submission. And I think, not to put you on the spot, Pam, but I think that you used to do that at Pepin, so there again, a potential savings on the audit fee, the Baker-Tilly fees, if the county was to take that on.
Yeah, for the state financial report, I know, I was always part of a regional group of finance directors. I was one of the only counties preparing our own state Form A, because technically if we give you good numbers, you have a model and should be able to have it mapped and it's more efficient. However, that is true for Pepin County. We did our own highway report, we did our own state financial report, and budgeting. So but most counties auditors do I call it state financial report, but that Form A.
Yeah, so again, just to point out, there are more than just audit fees within these numbers. So.
Yeah, and just another thing, is that ours with that hot mix plant, it does make it more complicated because of the highway.
Yeah.
But, when you, all the stuff that goes into making black.
Can you turn on your microphone, please?
Everything that goes into the highway is more difficult here because we do have the highway, the hot mix plant, and you're getting materials in, materials out, and how you separate all the labor costs and everything. That does add a lot more work for you guys. I will say this, hopefully it'll get better now with the new system, but that is a little more work for them.
I'll add real quick. So, yeah, in addition to what Shiana brought up, we also performed the attest of the Tax 16 opinion at the end of the July as well. And in speaking to the highway, I work closely with Diane, and I do think that with the implementation of Tyler, as long as she's utilizing that and understanding the software, I think that will assist her with that preparation and some of the changes that she's working towards implementing related to the hot mix plant and the records for that as well. So we're really hoping for some success in that area this year.
Yeah, thanks for bringing that up, Audie, because they're, looking at the sheet, there's other factors that go into it, a lot, so it's kind of,
There are, but with oversight from a business office, that will impact all of those areas, I think is what Sheehan and Vanessa are saying, is that it still will it should decrease auditing costs. I guess if you don't want to call it auditing, or what are Baker Tilly costs. Let's call it that instead, maybe.
Yes. Yes, and I think there's a ton of potential here. Your new software we see it used at several other places. It's a very comprehensive software. It just needs to be used. You know, it needs still the people to do the things, but it has a lot of potential to improve things.
And speaking to what Becky had just said, to a lot of what Pam would be able to provide this year, I mean, we started May 1st. So yeah, so there wasn't any time before the audit to really dig in and prepare some of those needed items, but just schedule preparation, reconciliation. Additionally, you have extensive knowledge with the highway. So I do work with Diane pretty closely annually to prepare the highway compilation. So I think a lot of that, there is definitely opportunity for Pam to take on that and reduce costs that way too. So I think.
And if I may, I would absolutely agree. So now we have Tyler in place, so we have the system in place. I am taking the system down on September 1st. We have to fix some implementation issues. So aside from a few of those things we've figured out, I spent a couple days last week with Tyler correcting some configuration type things. Then the system should be pretty solid, but then like they also said, which I hope you heard, it also takes then the people to input the data and use the system. So we'll have a strong foundation with a good system, but now it's the people, and that's some of the reconciliation and catch up now that we have to do, is have the people get the stuff in the system and caught up.
Any other questions?
Okay. Well, let's look at some numbers then for 2025. And I mean, all in all, a lot of this is good news. So I hope we're bringing the tone back up here. So, okay. So I'm going to cover this front and back first page of your handout. I'm going to save the other 2 pages for later. So, starting out with your general fund, looking at the fund balance. Your general fund balance, so your main operating account of the county, is really one of the most important metrics to help assess the health of the county. Having a healthy fund balance allows for, unplanned expenses, budgeting overages, and just flexibility for when timing of revenues come in. Sometimes you need to make a payment before the revenue is there. So your fund balance can be broken into up to these 5 categories, and they are listed in order of liquidity and restriction, with the top being the least liquid and most restricted amounts. So non-spendable fund balance, as the name sounds, it is in a non-spendable form, so it's not available to use. That amount of about $550,000 at year end is some of your long-term tax certificates, kind of those unknown if they'll be collected, and any prepaid expenses. So you've already paid it out. It just hasn't hit the expenditure line, which will happen in '26. There's no restricted fund balance at year end. You do have a committed fund balance of $1.2 million. So that is an amount that you as the board have set aside for a particular purpose through resolution. So the only way to uncommit that would also be through a resolution. So that's for your workers' comp reserve, that $1.2 million. And then you have the assigned fund balance, so that, again, is what the county has set aside for a specific purpose, just not as restricted, I guess, or as committed. So you have a little more flexibility in how that's used. But that 1.7 million is your various non-lapsing accounts, so for the different departments. And then finally, the unassigned is your residual positive fund balance to be used for future operations. That's about 9.6 million. So in total, your fund balance at December 31, 2025 is just over $13 million. And that is about $143,000 increase over the previous year. Kind of the next section then is a look at kind of an adequacy measure to see if your fund balance is an adequate amount. So we compare the committed, assigned, and unassigned fund balance, also known as your available fund balance. So that's, you as the board have the control to use it, about 12.5 million in comparison to what the total expenditures for the year were just over 18 million. So you have about 68% of your expenditures on hand at year end. That equates to having about 8 months, 8 months in reserves. If you were to get nothing else in the door, you can operate for about 8 months. The graph then is just showing a 3-year trend. The bottom blue line, which is just under 20%, that's what the Government Finance Officers Association recommends as a minimum. So having about 2 months on hand minimum. So with the county being more at like 8 months, you have a pretty steady trend here, kind of, slowly increasing, but staying pretty steady. From our perspective, that is a healthy fund balance. You have an adequate amount on hand for cash flows. You're also not holding too much. Once you start getting into having multiple years on hand, that's when people question if your tax levy is too high or, your other sources. But so we would, from our perspective, the fund balance is healthy at year end. So I mentioned at the bottom here, that kind of looking at the income statement, I mentioned that your fund balance increased about 143,000. So this shows the revenues and expenditure totals that led to that increase. So the first column is your 2025 actual amounts. Next column over then was your final budgeted amount. So you planned for a loss of just under 3.3 million, and you had a gain of 143,000. So all in all, very positive results compared to your budget amounts. Pages 58 through 61 of your financial statement document that I was mentioning before has a real detailed breakdown of those budget to actual amounts by department. So if you want to see which particular departments were over or under budget, you can look there. 58 to 61. And, so ultimately your revenues were almost $1.7 million over budget. A lot of that is your sales tax revenues. There also were some TIF districts within the county at different municipalities that closed during 2025, and then the county gets the refund of any additional or excess funds in there. So that was about 360,000 roughly of revenue that you didn't budget for, 390. Okay. Yeah, right. And then on the expense side, you're about $1.8 million under budget. So there are a few different things led to that. Your workers' comp expenditures were about 1.1 million under budget. So, that's kind of an uncontrollable amount, but good to see that was under. There were transfers out to the capital projects fund related to the courthouse remodel. There were some funds that general fund was holding that really were for that purpose. So that was about $1.6 million transferred to that fund that were not in the budget. So again, you can look at the details in there. There's different departments that were over, under. So, did you have a question?
Well, I keep getting questioned as to, and I don't know if you can answer this, but the amount of levy that was given to 2025 budget, how much of that came back to the general fund?
How much tax levy came?
Yes, tax levy, yes.
Let me look. So that would be your tax revenues. On page 8, the general fund taxes was 12 million. And again, that's going to include your sales tax and, that detailed budget actual. Does that have it, Vanessa? That's probably more broken down. Yes, general property tax is 8.3 million. So that's on page 58. You can see the general property tax levy that was revenue. 58.
And that would actually, if you're looking at that on page 58, general property tax
Yep.
was actually $34,000 then,
Yep, under your budget.
under budget. So that would be considered what went into the general fund, wouldn't you think? Of the tax levy? Yes, no?
Like, into the fund balance,
Yeah.
that loss, or that,
Well, technically, yeah, it would be a,
It's lost on here.
I mean,
It's
it's,
a loss,
that's,
yeah.
that's compared to your budget, compared to your plan. It's not really a loss, because you have expenses that would create, your actuals are what go into your fund balance. But compared to your budget, yes, you came up $34,000 short of budget to that number.
Or Supervisor Anderson, if I may, I think you had asked me the question, if I interpreted it correctly, how much would come back from other funds to the general fund as a result of 2025 results that we
Correct.
could maybe pull forward into the 2027 budgeting process?
oh, yeah.
Was that what you were
Yes.
asking? Okay.
Thank you.
I mean, that's the $143,000 bottom line is what you'd carry forward into your next budgeting, like you had an increase of the bottom line. Okay, so that's kind of the overview of the general fund. The other, second page then, takes a look at just other funds, different metrics within the financials. So your cash and investments, I have just a 3-year trend here showing your unrestricted, restricted, and fiduciary balances. Restricted balance is up to 4.9 million in 2025. That's your bond proceeds. You issued 6.5 million of debt, and there's some unspent amounts at the end of the year. And then the fiduciary funds are not county funds, so you can't look at those as being anything you can spend, but those are funds held for, clerk of courts, register of deeds, treasurer's taxes, so those different, the inmate accounts, so things that are not county funds, but they do come into your cash balances. And then there's a number of special revenue funds, debt service fund, and the capital projects funds. Again, 3-year trends of those fund balance amounts. I don't have a lot to note there unless there's specific questions, but your debt service stays pretty flat because you levy for your principal and interest payments. You make those, so that one stays pretty steady. The capital projects fund, again, you can see that jump in the fund balance because you issued debt and didn't pay all of the expenses out yet in 2025. So just carry that fund balance forward to be used with the remainder of the projects. Then we have the enterprise fund. So we focus just on the highway here because that's what we are auditing. All of these metrics are pretty steady year over year. I will mention there was a change in the accounting for highway in 2025, whereby you broke highway into kind of 2 different funds. It's still all wrapped up into one in the financial reporting, but you now have your capital projects fund paying highway for the services that the county is purchasing from highway. The net effect is the same on the bottom lines, but if you were comparing these numbers in the financial statements year over year, the revenues and expenditures will be higher because of some of that intergovernment activity, but so just a change in how things were being accounted for. And to say that what was done previously was not wrong either. So it was more of a preference of the county. Then the last few numbers here on the slide, or the page, are the debt metrics. So looking at outstanding general obligation debt at the end of 2025, just under 70 million, compared to your debt capacity, which is calculated as 5% of your equalized taxable value. So your debt capacity is 192 million. So you've used about 36% of your debt capacity with your outstanding debt. Debt payments are being made as on schedule. You did issue the one new debt issue in 25, but as you can see in the trend, you have a really nice rising tax base too. So that
What's
helps
the
increase.
average for most counties?
I get asked that question a lot. There really isn't an average, I guess. There isn't like a right number.
I mean, is it,
But-
you should be about 23%, should be
Well,
47%.
I mean, it depends.
What would you suggest?
Yeah, it really depends what you're borrowing for. So if you're borrowing for a capital project that, you have the planned levy over the next 40 years to pay for it, that's probably responsible borrowing. If you're borrowing to make payroll,
Oh, that's,
I'd
okay, I
have
see
a
what
little
you're saying.
different
For a building like
idea.
this, it's okay to be at 32%,
Yeah.
but if you're.
Yeah. And
just
if you
down there
look-
Just on wages, it'd be not so good.
right, if you're borrowing for operations, I hope you have a plan.
Okay, well, that's good to know, though.
Yeah.
I mean, at least,
Yeah.
at least we.
Yes,
at
I mean,
the
borrowing
point-
for capital projects, when you think about it, if you pay for a park up front, you're using everybody's past tax dollars to pay for it, right? Your built-up reserves. If you borrow for it, then the people who are living here and using the park are the ones paying taxes towards it, and they're essentially paying their portion to use the services. So that's one way to look at it, is when you borrow for projects, those who are paying for it are the ones using it versus reserves of, people that may have moved out of the city or moved out of the county and their past tax dollars are paying for it. But yeah, I mean, I have no concerns over
there's
that
not a magic number that
36%. There's not a
averages
magic
across
number. If you're getting over 50%, it's maybe, what, are you doing too much too fast? A few years ago, I think you guys were approaching that 50% because of the jail project. That was a very large debt to take on. So I guess, typically you wouldn't then take on another $50 million project at the same time,
Well, we
spread
would
those
hope
things
not.
out. So you've definitely come down. I mean, you're making those debt payments. They're not,
And if we did, you'd be talking to a whole different group.
yeah. Yes.
Okay,
Yeah.
thank you, I appreciate that.
Yep. All right. And then the last one is just looking at your annual debt service and how much of your principal and interest is made up compared to the total expenditures. So your total non-capital expenditures, so, your payrolls, your services to the constituents, about 33 million. So that doesn't include any capital projects, no courthouse remodel. Compared to your debt service, your principal and interest of about 4.9 million for the year. So your debt service makes up about 14.5% of your total expenditures. The bond rating agencies at the bottom there, that blue line, one of the metrics they will use to do ratings is to see that is under 20%. So the county's been pretty consistent at that 14.5. So consistently below that maximum, that would be, you wouldn't be penalized in a rating meeting because of how much debt service you're paying annually. So with that ends my planned remarks. I do want to give a very big thank you. I know we just talked about a lot of the problems, the issues we had, but all in all, everybody extremely helpful. I think everybody wants to do the right thing. Everybody wants to be helpful and move this process along. So I think you have a good base. So just thank you to all the staff that were part of this. We asked a lot of questions. We made them dig through a lot of things, old records, things they're not using anymore, but we really do appreciate the assistance. So, any other questions at this time?
Thank you very much for
Okay.
the report. Well
Yes.
appreciated. And I too want to thank all the people that assisted you, employees of the county here as well.
Yeah.
All right.
Okay,
Thank you.
thanks.
Thanks to both of you. It's great to work with you. Thanks so much for your help.
Find my agenda again. All right, moving on. We'll go to discussion review of ETF health insurance expected increase for 2027. We'll turn that over to you, Rebecca and Pam.
Yeah, I'll get this started. This again is just for discussion and to put this on your radar, because this will be a big part of our discussion as we work through budgeting this year. In talking about, which I brought forward last year as an initial conversation, and talking about the high increases in health insurance that we're seeing, and which is it's a great benefit, and but it's getting harder and harder, and so that's the conversation I brought forward last year when we had an 11% increase that we were seeing, and now this year ETF has shared that we will see a 23% increase in our health insurance costs. So what I talked to Pam about is I was interested in looking at what does that cost us overall, but what is the value, again, to the employee? Because we're going to have a balanced conversation about employee wages and employee benefits. And again, I tried to bring this forward last year. I'm just trying to contemplate how we break down this conversation, because it's a difficult conversation. We want to have the best. We just had a wage study person on here talking about the importance of being competitive, and I'm going to share the results of our prioritizations survey that we did. And we all understand and we all want that, and we want it all, right? And I agree. I am right there with you. And but it comes down to, again, in just the numbers and and how they all fit together. So again, this is just to put it on your radar, because there's a lot of work that goes into just because we're telling you there's this 23% increase, that we have to do a lot of, we need to figure out and finalize more of what are the increases in our revenues this year, right? Where's our net new construction? I've shown you over the years this up and down pattern that's been showing in Trempealeau County. We're in a down year again. So how does that impact our about how we're going to afford these great pay and benefit that everybody wants, and that really are important because of the pressures that we feel? But how do we also make sure that we're staying in line with our levy limits, and also thinking of the taxpayer? So Pam put together a calculator for us to take a look at what does this 23% increase mean. So maybe, Pam, I'll have you explain that. What I was looking for was to say, if we're looking at an increase of a certain percentage in pay increase for individuals in wages, right? What does that really mean when we say an 11% increase in health insurance? What the part the county picks up and what that means to a person's pocketbook, right? And so now we're at a 23% increase. So what wage are we going to be able to give as far as a wage increase, whether it's step and cost of living, but also then offsetting what is the increase in the impact on the county, but also what that means to the employee. So if they're getting this percent over here in wages, what percent really does that mean to them in their pocketbook as far as the health insurance piece that we love and we understand. And I'm sorry, I'm talking on and on here about this, but it's a difficult conversation. So this is just to start us out in talking about this. And Pam, I'll hand it over to you with your calculator.
Yep. So I was going to bring an Excel sheet up online, but I figured you'd want to see copies of it too. So I printed out some pages for you. The highlighted cells are ones that I can change. So the first page I gave you shows, the first thing I did is just to make sure we were in line with where we need to be. The max employer share that you can pay is 88%. The minimum is 50%. So I did the calculations to make sure. Those are kind of I call them our, guide rails. Are we within that? We are. We're okay. And of course, Shelley was here, but she's the expert in all this. But at any rate, so then the next, thank you, Rebecca, she's sharing it for you. So can you push plus on that a little bit to zoom it out just a touch, Rebecca? So the next is Quartz West. That, not absolutely everybody is on Quartz West, but the majority is. I would say 95% of our employees are on Quartz West. So I just used that for the model. You can see on here, we have single rates and we have family rates. Of the single rate, that's the total that we pay per person to ETF. But then the employer pays a piece and the employee pays a piece. So for 2027, that is the Quartz West rate that they are coming back with. I put on here what the 2026 rate is, so you can see the increase. And that does show the 23%. So then the other thing I did is, so then I can go to the right in the model, and that's the second page I gave you, and I'm not proposing anything, I'm not suggesting anything, I just wanted you to see how the model works. The second page I gave you, for instance, I plunked in 85%, just to pick a number and show you how the model works and kind of what an implication would be. So at the bottom of that page, the other thing I did is, this is how many people on the plans we have. So for the courthouse, and I broke out human services and highway because typically in my budgeting experience, dollar for dollar increase to highway and human services, part of their programs picks it up. So the state or, highway, they charge work to others and they build it into their fringe rates, things like that. So if I go out to the highway and say, I've got, $100,000 in health insurance increase for you, we don't need to give them $100,000 in levy. We only need to give them a bit less than that. Now, I don't have the experience yet with Trempealeau County to say what percent. You usually can estimate like what percent, and I would normally know if I'm going to give him X dollars in extra expense, what percent we're going to have to give him extra levy to cover. I don't know that yet, and that's typical for human services and highway. So I wanted to break that out. So on this particular sheet with the 88%, you can see if highway, and the same is true for human services, they have a lot of programs and they can build it in and get reimbursed for it. So worst case, you can see if human services and highway could absorb their full amount, Rebecca's on the 85 page. Can you go back to the 88 page? If highway and human services could absorb 100% of their increase, if we left everything the same with the county paying 88%, we would have $575,000 of extra expense to cover. If human services and highway said we can't absorb $0, your full price ticket is a little bit over $1 million. That's what this 23% means. Now, I know Rebecca referenced net new construction. We did get some preliminary numbers that are out there, not final, they're preliminary. The finals don't come out, I think August 14th is what I saw. Our net new construction percentage is 0.76%. So I always refer to that as what's your new money. if you do the math on that, which I did, the new money is, or what I call the new money, is 0.76%, $84,441. So you can compare the two numbers and see what we're facing.
But
So
we got to remember there are other revenues that we'll look at as well. I don't.
there are.
But
Yep.
just to put it
Yep.
into perspective, though, is Pam is correct. It's not those net new construction rates really start to limit us, but then we start to build. That's what we'll look at on our side is other revenues that can come into that. But you're starting at 80-some $1,000s.
Yep.
So this is why I want to have the conversation now is saying, because it's, yeah, there is just a lot of maneuvering in where can we get to. So, sorry, Pam.
It's okay. A few numbers we'll start to look at, like we hit earlier in this meeting, you mentioned sales tax is trending upwards. So there's some extra revenue. The auditors just talked about that extra $134,000 that came back from 2025 to the general fund. There is some additional dollars. So things like that, we'll start to put that list together, but net new construction is also a piece. So this is really what we want to get in front of you. Now, the other thing that I always kind of look at is as you ponder in your head where you want to go with this, there was a third sheet, or Rebecca, it's on the right in the model, or no, it's the third sheet, okay, that I gave everybody. So this, to put it into perspective, I took a $30 an hour employee and a $25 an hour employee. If we gave them a 2% increase, what does that mean? So, assuming people just work 2080, which salary is based on a 2080 work year or hourly, that's average with no overtime. That would mean to them, if they're a $30 an hour employee, a 2% increase, they would get $104, and this is gross, I realize, but $104 of additional wage per month. So that's where if you go over to the sheet where I tweaked it, or where you can see the increases, that's where you can see the.
This is what.
Yep.
Good, yes.
Yep, so
Sorry,
you,
go ahead.
so you see that $104 that I just told you a $30 an hour person would get, their increase, if we leave it at 88, their increase here, I'll step away from the microphone just a minute. Single plan, family plan. So those are, so what I just pointed out on the screen, a single plan, if we left it at 88%, with the 23% increase we're talking about, on a single plan, an employee would have an extra $29.84 a year. A family plan would be $74.12, a month, per month. And you compare that if you gave a $30 an hour person 2% increase, $104 change. Now the other, per month. So now the other thing I did is I also did a $25 an hour person because depending upon where our staff is and kind of what averages we have, those are two scenarios that kind of fit people, or on average our employees. So go to the 80. So for instance, you could tweak it now. So for a $25 an hour person, that's your $86.67 would be a 2% increase. That's what their gross per month changes. So now if you go to the 85% page, for instance, and I just picked that, not implying anything, but I just picked it for an example. If you change it to 85% you wanted to pay, and that's what this model, I can plug whatever in and tell you the implications. Now, a single plan, an employee would have $69.92 would be their increase in their premiums. A person with a family plan would have an increase of $172.90 per month in health insurance expense.
I think the one thing I wanted to show with this is the 2% increase is $100 and some dollars, let's just say, around there. This is what the county picks up on the 88%, $218 a month for a single, and $543 a month for a family. So when we're talking about they got a 2% increase of the $100, this is what they're getting in an increase that the county is picking up on that 23%. So the value here is far outweighing. This is where I just really want people to understand because if we're only, quote unquote, only giving a 2% increase, this is what that impact is here. And I don't know the percentage, Pam, but that same, so I'm just saying if it was $100 increase, well, now they just received a 4% increase of what is a financial impact. In over here, it would be, what is that? It has to be, an 8-9% increase of the and I don't know if I'm sharing that correctly, but that's just the way I'm trying to kind of break it down and just saying again, we got to start looking at the value of this health insurance, and I want to do both. I don't think that's anybody, and again, we're going to go through this prioritization, and so that's the majority of your board that wants to do both as well, but it is a huge cost. And then how much of a pay increase can you do along with that? I just, so this is the conversation that we get back to. So I want you to be aware of it because we have to have these hard conversations. I tried that last year and it was a hard discussion. And I was frustrated because I don't think it was really understood. This is where I'm hoping we start this conversation early, and with Pam's help and this calculator and thinking about it this way, we can have these discussions and start to think about how we're going to tackle this. And then we have to have a discussion about what are we going to do for the future?
Have you guys looked at any other insurances other than just Quartz West, like an independent party or anything else? I mean,
Through ETF, you are not allowed.
You can look all you want. You can look and get different, I mean, just so you got something to compare it to out there. I mean, it's good insurance. I'm not saying anything against it, but you have to have something to compare it to, knowing that we're not way out of whack one way or the other. You can look at it and get the numbers at least.
Yes. Are you talking about going away from ETF? Is that what you're saying is, yeah. And that is the conversation.
Yeah.
Yeah, that is the conversation I've had with Chair Todd. That's a conversation that when I'm talking about future, it needs to be a part of the conversation that we're having and saying, we need to start looking at this. It's not something, that is a long process just to do. I mean, we can just grab numbers, but really it's a long process of determining those things. And so I would say that would be a direction, an initiative from the county board that they would like to see us start to investigate, because it's probably a year and a half planning if we were to leave ETF. There are a lot of questions around that in itself as well.
When you stay with ETF, though, you're just stuck there. And, I mean, I just feel it wouldn't take that long just to get some numbers, not to get the whole booklet and packet and everything. But we know we're in the ballpark with this. I mean, does ETF offer you any other variations of insurance inside, like West, at any of the percentages change?
Is Shelley Reitman there? Is Shelley there?
No,
here.
there, she's online.
Oh, she's online.
There she is.
I was there, but then I went back to my office.
So maybe Shelley can talk about this because she is the guru on our health insurance, and you can speak to the process of ETF.
Okay. Can you ask the question again, just so I know what you're specifically?
Does ETF offer any other variables on this, like with maybe even a deduction or so we can get the prices down a little bit? Or is this just a flat percentage?
Oh, yes. Yep. So us being local employers versus like a state employer, we actually have a range. And on that slide that Pam shared, she did put what that range is on there. But we as an employer have a choice in what we're paying for the premium. We have to pay between 50% and 88% of what is the average of the tier 1 plans in our local service area. So what that really means is ETF annually tells us what is considered our tier 1 health plan that's located within Trempealeau County. And that's what these prices are based off of, and that's where what we have to think of, what is between 50 and 88%. So the state maintenance plan is what our tier 1 plan is for 2027. So we have to look at what is the total cost premium of the state maintenance plan. Then we come and say, okay, we as an employer, we're obligated to pay between 50% and 88% of that total premium of the S&P plan. Now, we don't have any employees that are on the S&P plan now, and we typically don't because they migrate towards the Courts West plan. And I would say 95% of our employees do take the Courts West plan. So that's why the way we talk about things, we think more about the Courts West plan than we do the S&P plan. So we tend to use verbiage like we will pay 88% of the Courts West plan as the employer. And 88% of Courts West is simply us saying we will pay 88% of the lowest cost plan local to the Trempealeau County service area. So we do have discretion in what percentage we will pay in that regard. And there are other plans ETF offers too. So right now we are on the local deductible plan, meaning it's a low deductible cost. So it's $500 deductible for a single plan. It's $1,000 deductible for a family plan. ETF offers high deductible health plan options, and they also offer a no deductible health plan option. So there are different opportunities within ETF.
How many different, they used to have like a Mayo plan, and they used to have like 5, 6 different plans. How many do we have?
Let's see. I'm going to count them quick. Like 25. 25. There are 25
different plans?
Yeah.
I was just going to say, as an example, when I was working, Gunderson, which is Quartz, right? Was the lowest cost plan, that's what the county did, but I wanted to stay with Mayo, so I stayed with Mayo, and I paid a little bit more on my side because the county only paid the 88% of the lowest cost plan, which was of the Quartz. So I had to pay a little bit more.
But Mayo and Courts used to flip-flop sometimes. All of a sudden,
Well,
one
and
would
that's
be way
probably-
low,
we
and then
don't-
you'd be on the Mayo plan for 2 years, and all of a sudden Gunderson would come in.
Sure, and Shelley, we haven't seen any of those numbers yet, have we, to see who's going to be the lowest?
Oh, no, we have them.
Oh, you
ETF
have them?
Released, I have the premium rates for 2027 and
Oh, okay.
Quartz
That's
is
early.
the lowest.
This is early, yeah.
This is early.
Yeah.
Wow.
And
Well,
those-
ETF is doing that early now.
And those are the numbers Shelley did give me, and that's what's in the model I gave you, are the 2027 actual numbers that Shelley did give me.
Aha, okay.
For courts.
For Quartz, but again,
For the lowest
Quartz,
cost plan.
but again, Quartz did come in as the lowest cost. Mayo didn't flip-flop. There isn't one now that's cheaper that a lot of our employees would migrate to, and that's kind of what you're talking
It
about.
used to be that way, yeah.
Choice of Courts, Mayo, whatever. You can see the difference in, like, I've done it too, Paul.
Yep,
I
yep.
paid the difference, higher difference, just because I wanted to stay with this one.
And there's
It'd
still,
be nice to have that here, too.
oh,
so we
there
can
still
see
is that choice. But based on when Shelley took a look at it, most people, based on cost, would probably still keep Quartz as their choice. But yeah, Shelley can provide you, she's got all the rates for all 25, and that's.
Shelley, could you email that to the committee, to us, so we can just take a look at it, and also with the different deductibles showing?
The different deductibles. So the rate sheets that ETF releases basically gives us the total premium cost of like each of those 25 plans. And so then that's where we get to come in and we can play with those numbers to say, you know, how much of that premium do we want to pay? And we have that choice, right, between 50 and 88%. So are you wanting, like, I guess, some sort of mock-ups of what would that look like if we paid 80% or if we paid 85%? Is that what you're asking for, plus what the total premiums are for 2027?
Yeah, well, that would probably be okay too, but I was talking about the deductible, what the employee would have to pay initially. Because last year, Rebecca, wasn't it like it was
Yeah, it's the 500 and 1,000 that we pay Shelley, and you were just talking about the high deductible plans and
Right.
things like that. If you could share that, I think is what you're asking, right, Rich?
Okay.
Yeah.
That, yes, I can. That would take an entire shift to move to a different health plan model within ETF. And so we would have to notify ETF of that in advance to make that change, to be able to shift to that. So, but yes, I can send you like the different models that ETF does offer, and what if we switch to a high deductible health plan model, what would that deductible be? I can send that, yeah.
Shelley, is there a deadline for a choice like that, or is that passed?
No, we're still in the window of that, but we'd want to make some decisions here, like in the next month.
I was gonna say, isn't it October
fast.
1st? October 1st
Because
is
you have
when
open enrollment in
for
October.
enroll, yeah.
Do you
So
know, is the
we'd have to-
healthcare center, they on the same ETF?
What?
Healthcare center?
Yep, they're on the same, yep.
Okay.
Yep, so that's a good point to bring up, because if we wanted to move away from the local deductible health plan where, right, the single plan is a $500 deductible, the family plan is $1,000, and we wanted to go, say, to that high deductible model, the healthcare center would need to come along with us, because the way ETF operates is you can't have two different health plan models at one time. You have to choose just one.
What's the county hospital model now then?
We're the same. It's
They're the same?
It's
The
the
Are they?
same.
Yeah, we're all on the local deductible, the 500 or 1,000. We have to be on the same between us and the healthcare center. Yeah, ETF only allows, you've got one choice of what your model is.
And Shelley, this is a little different. With the deductible, how long have we paid the full deductible for all the employees? Is that a 20-year past investment on our part, or
No, not that.
how long has it been?
Gosh, as long.
Hasn't been 20 years. Is it close to, maybe?
I would
10?
probably,
10 to 15, maybe?
at least 10.
Yep, yep.
Mhm.
All right.
So
Yeah.
this is, I would just say again, so these are the really difficult questions about this. And then in my circles of working, collaborating with other administrators and finance directors is the discussion about, like, again, finding self-insurance, right? And getting our own health insurance self-funded. Or going out and doing another collaboration with other, counties or something. It's a broad conversation that is also always out there and saying, yes, but this county left ETF, and there's a number of counties that want to get back in. So it's a really difficult conversation, and to the point of what Supervisor Whalen is saying, it has been a long, standing offering that we have. It's a good one. I mean, it's a great health insurance plan. So then you go back to, if you shift from the 88%, you're putting more on the employee. And that is something that, again, prioritization, we want to, highlight the employee and make sure that we're keeping employees, but it's also the affordability piece. So just really hard, difficult conversations that we have to deal with at some point. So it was just, my hope is to bring this up again this year to talk about, because again, as we are building our revenues and looking at our revenues, we've got to look at all these expenses. This is a big expense. And so I want this on your radar to help you understand that this has to be a broader discussion about, how do we manage it this year, but how do we manage it for the future?
Any other questions in reference to this topic? It looks like it's going to be quite challenging. you know, we want to be fair to the employees, no doubt about that, but we got a responsibility to the taxpayers as well. And it'll be interesting to see how the wage study comes out and then look at this as well. I think that'll be a great factor into it too, but, all right. No other discussion or questions?
No.
If not, let's move on here. 2027 budget listening sessions update.
Just real quick for the public, we had 2 sessions, one in Centerville, one in Osseo. I thought that they were very good discussions. It was a great opportunity to meet with the public. We talked about opportunities to increase the number or the spread of at least getting information out that those meetings were occurring. And so I shared that with Lexi in communications and asking that as we look to do this in the future, that you know, we look to get that word out. But overall, even though the groups were smaller, they were good discussions. I don't know if Chair Todd or Supervisor Anderson, if you have anything to add.
Chair? I just think next time we'll have to try to get, we had some good suggestions about getting it out a little better than we did get it out. So for next year, I definitely suggest that we maybe work a little ahead of time, maybe a month, maybe 2 months ahead, getting that information out and asking requests, and maybe asking the supervisors to get out there to their towns. Mr. Whalen, I appreciate what you did, getting out to the towns and letting them know, hey, we're having a meeting. If you guys are interested, please come down to that meeting for that area so we can discuss more when it comes to the budget.
And the reason I brought that up with municipalities is they always want us to communicate when they have a large item coming through, like the referendums that'll be coming in through the school districts. So that's why I mentioned the school districts, and then any increased expenses for the municipalities. Because we never have that conversation that, hey, we have this big hit coming in the 27 budget, and if we all know in advance, we can kind of be sensitive with the other people's needs as far as finance goes. That's why I brought that up with my municipalities. And I hope they all came.
I would just say we did get that to the communications a month and a half previous to that. It was in the internal employee newsletter. And it was shared at multiple meetings. I think that it was, again, that next year, there has to be a broader focus on how that's put out through our communications department.
It was also brought up to the township chairs have a meeting periodically, quarterly or whatever, is we can notify them and get it on their agenda so they are aware of it and attend those. Because I think it's really important for the public and townships to be present. Anything else? If not, we'll go on. Discussion of 2027 budget prioritization survey results.
So I don't want to spend a lot of time on this because I'll bring it up again, and I know our meeting's getting long here, and we still have several other items that are lengthy discussions, but so I'll bring this up again at our county board meeting, but I did want you to see this first. I think I have it on, yes, I have it on the PB agenda as well. So some of you will be really sick of it, but I just wanted to highlight there's a handout. Pam, can you share that handout? It's a printout that shares the, let's see here, sorry.
Yep, I just walked around and handed out what you gave me for them.
Okay, thank you. This is, so that's the questions that had people respond. So I'm not going to go over that. You can look at that in your own time. So I'll just kind of, again, quickly kind of go through this. Which statement? We had 15 responses out of the 17. People could do it on paper or electronic. I have no idea who those 15 are or aren't the ones we're missing, but so just thanks to everyone that did take the time. I think it's helpful. for us to take a look at. Which statement best reflects your budget philosophy? And then, so on top, maintain current services with minimal tax impact. That was the top priority. Focus primarily on public safety mandated services, focus primarily on infrastructure and capital needs, focus on workforce retention, employee compensation, prioritize strategic investments, even if costs increase, and then reduce spending wherever possible. That's where this in priorities laid out. I think as we get through this, some of it seems a little contradictory in some of what I have looked at in these numbers. So, but I think overall, this falls in line with what we're going to see here. So here's some comments. You got that. What do you believe should be the county's highest budget priority for 2027? They could select up to 3. The top 4 then, highway infrastructure, 17%. The employee and recruitment retention, higher pay and benefits right underneath that at 11%, rated highest. And then economic development in housing initiatives rated in at 13%. So you can see the percentages here in the priorities. County government must often balance competing priorities with limited available revenue. Please indicate your level of support for the following budget considerations and new position requests. So strongly agree is the dark red, orange is support, then you have neutral and gray, oppose is blue, and the dark blue is strongly oppose. Wage adjustments to remain market competitive. This is what we just got done talking about, and this is why I wanted to tie these two together and saying, the board really supports strongly or supports wage adjustments to remain market competitive. And even everybody else is just kind of neutral to that. You have most people that are in support of that, 73.4% strongly agree or agree. Increased technology investments, 40%. You can see here, 6.7% strongly support or support is 33%. So a 40% support that, the rest remain neutral. Additional funding for infrastructure facilities. We've done a lot of that already. So people are probably feeling a little bit more like we're pretty neutral to that because we have done some big building projects lately. Reducing benefit package in order to add positions, provide better wage increases. Do we want to start looking at position? And so that's kind of neutral as far as some support, some disagree with that. Overall, you've got this neutral of 33%. Then we got into the additional position requests. I will tell you in my conversations with other counties, because I meet with county administrators every week, the conversation often is we don't even allow conversations about adding people because there's no money for it. And others do allow the conversation. And my feeling is I think we should allow the conversation and thinking about it because there obviously is need. We just talked about that last year with Corp Council, and I think we all believe that was a good addition. But to add personnel, and when we're talking about the huge costs of benefits and wages and the very small increases we see in net new construction, gets harder and harder to contemplate how we can make that happen. So, but just to give you an overview, the two that stood out here on top, you had support for adding the deputy clerk of court, which makes sense. We're seeing that you added a DA. Now we've got extra work that works through the system. And again, you're going to, potentially add a judge in the future. That is going to impact your clerk of courts, and it looks like it already is. And then we had adding the deputy treasurer. The support here is at 33%. Add 1 land management technician. Here we had 26% total support. You can see then too, where some of these things are more negative on this end. And then this adding human resources position separating from county administrator, that again, overly 6.7%, same as the clerk of court. If all position requests cannot be funded, then rank them in top priority. This is where I was a little confused, because I would have the responses would have been deputy clerk and then the human resource position separated, but it actually second highest would be deputy treasurer in this land management tech, and then human resource and parks facility. These are more comments. If the county experiences limited new revenue availability, which areas should receive the highest consideration for funding? Here again, we see employee wages, and then highway infrastructure projects, public safety, staffing. The benefits did drop down a little bit. Health and human services needs, economic development initiatives, technology, software, and facility maintenance and capital improvements. Again, a little different than what we saw in that very first question that talked about priorities in that first question. Rank economic development in order of importance, and you can see housing initiatives stands out. I will say that in that response, I'm trying to, I wanted to print this out, but I wasn't able to get it to print out because it's a web-based questionnaire. But if I can get it to print out at some point, I'd like to just show some of these breakdowns a little more. This childcare would have been, it was 1, 2, or 3, naming them 1, 2, or 3. And so I think that was a little bit, could be skew some different information. Which approach do you generally support when major needs arise? 33% combined, both depending on project type. 27% use debt strategically for long-term capital projects. Unsure, need more information, and pay cash whenever possible. I do kind of agree in saying it's kind of hard to determine, maybe answering that if we don't have the full information. What level of importance do you place on maintaining competitive wages to recruit, retain employees? Here we can see very important and extremely important. We're pretty high in those two areas, just in support of our employees and their benefits. What level of importance do you place on maintaining competitive benefits to recruit and retain? So here you go. This was wages, and now you're looking at benefits. Again, we're placing value on our employees. And I think that's it. So questions about that so far? Like I said, I'll bring it forward again to PB, but also to the county board. As a part of this discussion, I do want to talk about, in September, I do want to go through an exercise with the board in looking at, again, what are our revenues, and again, taking these priorities that we've determined through this survey, and then having you work through a prioritization of, oh, now here are the funds that you actually have. Where do you want us to place that in priority when we're building the budget? So we'll do that in September. I'm hoping, if you're in agreement.
Mr. Chair. Becky, can we get a copy of that, a printed copy of that when you get a chance for the next meeting? Because I think that's very informative.
Okay, I will try to get that for you. I'm not sure how yet, but I'll work on it.
You saved me from asking.
I can't hear anything.
We're on the 2027 budget planning update.
Okay, just real quick update. We are on schedule. I had sent that out to you previous. I'll send you the updated one. I just didn't get a chance to do that yesterday before I was out the door, but basically we're on schedule again. A big shout out to Pam, thank you, and to Jade on our Tyler. I'm feeling about things and where we're at today. And the plan I had brought forward and talking about, and Pam had talked about in the past of whether we were going to actually use Tyler to build out our budget this year. The plan is to do that. Pam has scheduled us, meaning department heads, fiscals, to do training on April 18th. And we'll learn how to do that. And that will then help us get the budgets ready for everyone. And we really are on schedule. So like I said, I'll send you that updated timeline after this meeting.
And Rebecca, I believe you meant August 18th, not April.
Oh, did I say, what did I say?
April, so it's August 18th is when the department head training is scheduled for.
Yeah, thank you.
Any other discussion, any questions? If not, we'll go to number 20, discussion and possible action regarding committee meeting recordings and live streaming and media coverage. Rebecca and Tim Robertson is here,
Yeah.
Lexi and Chair Todd.
Okay, good. I was just going to ask if Tim was there. So this is a broader conversation of talking about getting uniformity across all of our meetings, but understanding or trying to look at personnel time and how long that takes to record, upload, and do those types of things. Again, as you're looking at a budget and as you're looking at the services that are provided, it's my job to share with you to think about services and to tread lightly when you're talking about adding services, right? Because once you add services, it's harder to take those away. So right now we have about half of our meetings covered, and whether they are streamed or videotaped. So my conversation a number of times with staff is talking about how can we do what we want to do, is get them all recorded, or how many we want streamed, what does that look like? How can we do that without using more personnel time? In fact, how do we save personnel time? Because there is technology that can do this and record or stream without as much personnel time as we're using. And then that way we can use the person for other things that, we have priorities in. So that led to a meeting with a group of individuals that I have worked with in the past. And I'd like Tim to kind of step in and talk about that meeting and our follow-up on that discussion.
Good morning. Yes, Becky brought in some experts that helped set up an arrangement they had in their community. It does simplify things, but it's designed for the space they were in. It allows simple functionality that you press a button to record a meeting, and then it even has a button that allows you to immediately stream it to a chosen internet site. So if you wanted it to be up on YouTube right away. It wouldn't come with the fancy graphics that we get through the TV studio, but it would meet some of the requirements for being more transparent and having meetings go out to the public. Unfortunately, it doesn't really work with the space we have here, because the space we have here, we have these cameras, and the studio is helping make it so that it's more viewable for the public, because right now my face is on there. When Rich speaks, it jumps over to him, and so on. So in order to make these meetings useful for the public so they can see who's speaking or they can clearly hear what's going on, we would have to make modifications to this space in the form of different cameras. In order to simplify things through a device like what they showed us, would also take some training for staff and modifications to the microphone setup, and possibly more. But as you can tell from the way I just presented that, all these things would require money. But it would allow for the board members themselves and for people like Mary that frequently attend to be able to just run the meeting, and then staff wouldn't need to be present. There is things we have to work through on that, making sure that because we have people connecting via Zoom, there are some things that have to be thought out, because what happens when you go into closed session? How do we avoid a situation like what we had, or what they had in La Crosse Finance Committee yesterday, where somebody came onto a Zoom meeting and started showing porn and all kinds of horrible language? So security is an issue, simplicity is an issue, making it so that whatever you're producing still meets standards that you're looking for. So hopefully, if you board members and Rebecca can work through the scope of what you're hoping to accomplish, we can provide technology that will deliver what you're looking for. But we want to make sure we're picking the right technology. We're picking the stuff that works most effectively for the price we can pay. Becky, is that about right?
It sounds good.
What is the price, Tim?
Well, for the cameras, I believe we'd be looking at about $12,000, but that doesn't completely simplify things, because then there's the microphone issue.
And installation there, what's the total package?
That, we're guessing about 12 grand for the cameras. I believe that's what Kevin was told previously. I imagine we put that out for bid. We look at doing that. We might find people that would be able to do it for less. But these are the old cameras that went in downstairs. So they're not purposed for this room to be able to either do one or the other. We need cameras that can handle multiple feeds, and then a way to actually have it so that it catches everybody in the room when there's no one telling which camera to go. So that's just a beginning cost. The device itself that Becky's team presented is about $2 grand, and there's probably an annual maintenance on that. It's a very reasonable device. And there's similar devices that we've looked at in the past that's about the range for a simple device. There are other solutions like an owl. I don't know if anybody's heard of those, but it's a little camera that jumps around. But the microphone piece is the problem there. So, and then the Zoom, because it doesn't handle the two connections. So there's complexities, and we're willing to work through it, but I'm guessing you'd be looking at somewhere between $10,000 and $25,000 to make it something that is workable. The other option, of course, you can consider would be, do all the meetings have to be in here? And I think the board has made it clear they want all board meetings here wherever possible. Sometimes you have to be off-site and what have you. The solution we look for, if you have to have highway out at highway and you want that recorded, or you want meetings at the healthcare center recorded, we might have to consider a portable solution as well. So those are all the things we need considered when coming up with a solution going forward.
I think we need more information on this, yes, definitely.
Yeah.
It's something we can look into, but you don't want to put a poor product out there either.
Yeah,
You
put it
know,
in, it doesn't work, we'll make it.
This works pretty well. People like this at home, so, but I think, yeah, we gotta have a little more information to see and cost, exactly what the cost would be, and how much cost savings does it pay to do all this if you're only saving $1,000 a year?
And
You know?
I think the difficulty here is I can't give you a cost until I know exactly what you want to accomplish. Do you want all meetings recorded? Do you want them all live streamed immediately? Do you all want the same level of broadcast quality as what you have now? What are the trade-offs you want? And then we can figure out a price point from there. So just imagine that it's going to cost a lot of money, figure out what you can live with, and then we'll start bringing in some possible solutions and money involved at that point.
The other thing we should look at, as far as technology, I've been working at the advances all the time. Sometimes you just need a person that can be a specialist and understand, oh, this happened 2 meetings ago. If we always divvy up the job to different people on the committees, we don't get that experience as far as for troubleshooting. Same thing happened, oh yeah, we had that happen at the La Crosse Finance meeting. We know how to fix it now because we've already had that happen. If we have a different person for every meeting being the expert, you're not going to develop the unique or quality straight across the board. This meeting was always really good for finance because we had somebody in there who really knew their stuff. But the next meeting, it was somebody else that came in, took over. Now we're losing that quality just because of the fact we have different people that are, if they're pushing the button, it would be great. But I've had enough technology that I was told all you have to do is push the button. That button doesn't always work. And I don't know if it's my inept, on my ability to press the button, but the whole 9 yards is I don't want to have somebody with my amateur status being in charge of getting the information out to everybody else while I'm trying to run a committee meeting, while I'm trying to listen to what people are saying. Because to me, multitasking is great. I can't do it. I apologize. It's one of those defects I've got. But I want you guys to realize when you pass it on to somebody who doesn't have that expertise, there's going to be a drop.
There's a cost there.
Yes.
Training's a cost as well. That would
You
be
bet.
staff time here to make sure all of you are up to date, and then that would have to be done on a regular basis, because if you don't use it, you lose it. So if Rich hasn't run a meeting for a while and he comes in and goes, oh, now what do I do? We'd have to consistently bring things up. I'm not to pick on you, Rich, I'm sorry.
And,
But it's just the thing.
and we're limited to 2-year terms.
Right.
And we might get eliminated quicker. So by the time you're up to speed at it, they're going to vote you off because you're going to run that meeting, but you haven't, you've got to have the experience of doing it. Here we have people that got the experience, they've been operating, they've been doing it. That's why when I have a problem, hey, Kevin, can you fix this? Because the Zoom isn't working. You've got to have the resources and the capability. As far as the multitasking, that exceeds what I think the average human being is comfortable when you're in front of a crowd. Not only are we exposing the meeting, we're exposing our incompetence when we can't work the technology. That's all I'll say.
And I'd like to add to the idea of, looking at how many truly meetings do we record / live stream if we did both? How many are really throughout the whole month in this county board meeting, in this county board? So, is there 8 a month or is there 10 a month? We got to look at that kind of an issue too. I mean, there's just not a whole lot of meetings that we have to be too concerned about when it comes to staffing it. I mean, if it was a meeting every day, couple meetings every day, then, we could, it's a situation where we could, hey, we got to take a really close look at what's going on. But when it comes to how many meetings we have, that's something we got to really look at when it comes to cost.
Mr. Chair?
And I have, I'm sorry. Is it okay if I speak, Chair?
Go ahead, Becky.
Oops, she's breaking up.
I will say, I did ask Lexi to do a team study with looking at the time that is spent. And so we do have some of that data as well. So we can put all of that together. I think this is exactly what we were hoping, is to get some direction from you all.
I was going to say at our healthcare center board meeting yesterday, we did bring up about the meeting here each month. And because the board actually goes to different facilities for their meetings, we did work it out so that now our meetings are recorded and uploaded to Kevin, and he's put them out the very next day. So they should have gone, our yesterday meeting should have gone out on the web today. So I'm going to say our IT and their IT, not you IT, but communications, has been working together, and at least, and we are receptive to coming here periodically because we do go to other facilities, but we would come here also and have our meetings. And I'm a big supporter of transparency, so I like live meetings the best. So I'm going to throw that out there because we want the public to know what happened today. They find out next week. I want it today if they're interested.
I think that's a consensus of a lot of county board members that they like it live. They've told me that, is there an issue with personnel within the studio or something that overly busy where they can't do it? Or I understand there's meetings, the county board meetings at 5:30, but mostly these are during the weekday and during the day. Yep.
Mr. Chair, just to add, piggyback on top of Paul's, is that the highway department's meeting here too now. We're going to try it for like, I think,
It was 3 months, try it.
Yeah.
But it
And
seems
see if
like it'll probably be here.
Yeah, see if it works here. So you want to keep a good quality show out there. And we have good quality employees right now.
Chair, if I can say something too. I had a talk with another supervisor also when it comes to that over there And the concern was too that over there, of course, the meeting's early, there's lack or not as many employees. So everyone, when you got to come over here, is there enough staffing over there to keep the doors open? So that was a concern for over there. And basically said, if you can, my opinion on this, going forward too, if it can't be over here, moving it over there and making sure it's just recorded and uploaded just like the healthcare center, me personally wouldn't have a problem with that either. And the other supervisor I talked to felt the same way. So, and that he's the one who brought it up to me. So I just wanted to point that out for everybody.
Well, the healthcare center, they've got an issue with their bylaws set by the state where they have to move around to certain areas. So,
And can I
Go ahead.
one other thing too is that their administrators, if there's an issue that comes up, state law, this is state law that says they only have 2 hours to report that to the state. If they're meeting here and all their administrators are here, they'd hurry up, they'd have to get back to the healthcare center to get that report in within the 2-hour limit. Now, that kind of concerned me a little bit too, but we are receptive of coming here.
probably,
If I'm hearing correctly, then we'll start putting together pricing information for what it would take to stream and then also staff information on all of that, and we'll get you some of that follow-up. Does that sound correct?
I think that sounds appropriate.
Okay.
What the rest do you think? Okay? Want to add to anything?
So do you want a motion that this be tabled to the next?
Yeah, I think so. I think that'd be proper.
Postponed?
What would it be?
Which,
What would be the best way to do it? Well, there's no motion on the floor yet, so there needs to be a motion on the floor, and then the best thing probably would do just to do a simple table, because then there's no discussion that would
We
complete
have
the
a motion
action.
to table this.
Mr. Chair, I will table this till we get more information.
Tabled by Severson, second to that.
I will second that.
Second by Todd. Any other discussion on it?
Can't discuss
Oh,
table.
we can't, that's right. I keep
But
forgetting
was the
that.
motion already moved?
Yeah,
There's already a motion.
Yes.
I mean, the main motion is what I was looking for, the original motion that we look at regarding committee meeting recording and streaming. Was there a main motion at all on that?
No, there were no motions made.
See, you need to do the main motion before we do the table. So I would move it, if it's need to have a main motion, I would move to, and making sure it's specific to what we said here. I move that we investigate committee meeting recording and live streaming and media coverage would be the main motion that we'd want to have out there, wouldn't it? And then, if we get a second, then we can move to table.
I'm going to go ahead and second that motion.
He's got the original, so now we got the main motion, and then if you can bring in your,
Well, we got to vote on that one first, or do we, no, that's going to
that
just sit there?
acts on
And then we do the table?
table, if you
Yes.
could, please.
Yes. Then I'll make a motion to table this issue until more information is brought forward.
And then I
that's where,
was seconding it
yep,
Second
now we
it.
got it.
now we can do all in favor?
You bet, on the table.
on the hand.
On the table. All in favor of that signify by saying aye.
Aye.
Opposed? Carried.
And I
Now,
apologize for that, Richard, but that's just I always did minutes for meetings, and to have the minutes correct, that means our actions are legal.
Very
That's why you're doing it that way.
that's
and
why you're sitting close to me.
Well, that's, actually, Susan would say that, but she
Yes, I-
doesn't want to offend, so that's, I don't mind offending you, Richard.
That's all right.
I can work with you on that.
Yes. So, now,
Mr. Chair, Mr. Chair,
yes, sir.
I just like to just throw this out to Rebecca too, that when you put this information together, just to show us the cost, not only of the product, but, okay, what, the people's time, if there's anything else they gotta do once they get the information. And if it records a meeting, does it send it right to or do they gotta download it all? and just so the total cost of labor and product.
Sure.
Lexi will be involved in it. Got it.
Yep.
All right, moving on. Discussion, possible action regarding the entrance door accessibility enhancements with Jeremy is here to speak.
Still morning? Yeah, still morning. Good morning. So I'm, what is it, 20 and 21? They're kind of interchangeable, so I'm going to kind of speak at them both
Sure.
at the same time. So I'm actually going to start with the exit one, because that one was brought up, I think, at your community budget stuff. So history on that was when this Justice Center was built, handicap operators were not part of the initial build. We put them in as a secondary issue. They were not required by ADA. They're technically not required unless the door exceeds a certain weight when you go to try to open it. But we did still install them. So the two on the main entrance and the main exit, there's no issues there. Those doors unlock. They scheduled to be unlocked 8 to 4:30 Monday through Friday. There's no issue. The one on the exit door, because of the security protocols that we also have for the building, I can't have that door unlocked during business hours, or else people could technically walk up to that door and then work their way through. So that door has a push bar. I've had Accurate Controls, which is the company that installs and oversees the card reader system that goes along with it, here to try to do some finagling with that, so that when you would hit the button for the handicap operator, it would retract the bar. They couldn't get it to work. Then I had the locksmith from True Lock here. They can get it to work, but they can't get it to communicate with the Accurate Control card reader system. So on the 24th of this month, I have Accurate Controls in-house. I have True Lock in-house, and I'll have B&B Electric in-house. So I'll have all three vendors here, so that when one leaves and they can't say, oh, they can't point fingers at each other. All three of them will be here at the same time. I've gotten confirmation from Accurate Controls that so long as we have a low voltage wire, which I've already ran to the door, to the network system for that, they can program it as long as the locksmith guy can run it from the button to the operator. So we'll have all three here that morning. 24th. So at the end of the day on the 24th, the button will open. Right now, you can hit the button and the door will attempt to open, but you have to hit the push bar after you hit the button to make it work. So it works, but it's not really optimal maybe for someone that's in a wheelchair that doesn't have anyone that's assisting them, because we couldn't put it any closer together, so they'd have to hit it and kind of get up there quickly. It doesn't really work the best. But by the end of the day, we'll have that rectified. The next one is going to be putting one on the entrance door. So when we put on the entrance past security on that glass wall, we didn't put one there originally because, again, normally we'd have two deputies at the front door. If someone would need assistance, one of the deputies could assist that person. Because, again, going back to the security issues that we have there, if I were to put a handicap button before the door that opened the door without swiping a badge, then it beats the purpose of having a badge reader on that door if someone can just hit the button. Secondary, the lock that's on that door is not a push bar. You actually, when the deputies unlock the door for you, you actually physically have to turn that handle in order to make the door open. So I can put an operator on that door, but we're gonna have to change the lock that's on the door to a push bar, and then have additional power ran. So on the 24th, all three of those vendors will start the process for me there. But the handicap button is going to have to be with the deputies, because they will unlock the door and then open the handicap at the same time. It will be there. It just will not be publicly accessible. So that one, and the funds to pay for this, so I have capital funds this year for a project that I went a different route with. I have $13,000 set aside for an issue at the loading dock stairs. The original price I had gotten was a couple $1,000s to add some stairs to that, because the issue with that was there's only a ramp on those stairs, and the ramp leads behind a giant gate. there's no way for the truck drivers or anyone else to get in there without squeezing through a little hole between the gate. It's just not conducive for business. So we cut part of those out. We're going to be building some stairs that are more permanent. We're just doing that in-house. The only cost is going to be a couple $100 for some metal tubing that will weld a small little handrail on. So I'm going to use the funds that I had set aside for that in order to pay for the operators, because I have a CIP request for next year already to put 2 new operators in this building, in the treasurer's office and the county, where the county clerks, they're behind those doors. We're going to put some on those ones there. So the cost of the operators are just about $4,000 installed. But with these ones down here, I also have to pay for the control system, and then I'm going to have a separate 120-volt power ran to this security entrance door. So it's actually $13,000 that I had for the stairs will cover the cost of that. So I'm not looking for additional money, just kind of giving you guys a heads up on. It was brought to my attention. So, and it's on me while the exit one isn't working, because again, we get somebody here and then didn't work, and then it goes out of sight, out of mind, mixed in with the 400 other things that I got told that day. So, and then it doesn't get brought to my attention again until somebody else has an issue. So I apologize that it hasn't been working correctly, but we'll have that corrected. So at the end of the day, everything should be taken care of. This one on the 24th, and I'll have a full price and schedule for the secure entrance door on the 24th. That one just won't be installed that day because we have to actually have a game plan, because I'm not going to do the he said, she said that it's their problem all at the same time, so.
Jeremy, do you have any funds left in the remodel? You haven't turned those back yet, or?
So-
right, in your contingency fee?
So that one, I've started some conversations with Pam, but we haven't finalized that yet either. But that one wasn't more like anything that I was given back. It just would have been stuff that wasn't spent. Because at the
Right.
last property, I think at the time it was, okay, here was the budget that I had, here's how much that I spent, here's much that was remaining in contingency, and here's how much should be in that budget line. That was in New Vision. At the end of '25. So where everything got moved into Tyler, I wasn't 100% sure. I knew the bills, I knew my starting budget, and I know what the ending number should be, but I know that we're hopefully within the next month, because that was a question asked of me this morning too. So I'll try to schedule something with Pam in the meantime so that we can have a number for you at next month's
I was just
exact
wondering if you
finance.
wanted to take it out of contingency, considering it would be kind of a remodel, and then you'd be able to save the money that you have put away in case some project opens up all of a sudden mysteriously in the next 4 months. You'd have someplace to go, to get funds if you needed it.
Fair enough, I'm comfortable with the additional stuff that I have in other CapEx projects, or capital expense projects for the remainder of this year. I don't foresee anything crazy, but, stuff does happen. But if anything catastrophic happened that I would need to do something quickly, it would be more money than I'd probably have on hand anyway, and I'd end up being here to tell you what I had to spend, asking forgiveness instead of permission if something went crazy bad.
Everything is new here, so we shouldn't have any big.
Everything is new here, and everything over there is brand new on the
Pertinent.
face. And there's a lot of things that, I have capital project requests for next year of the
Okay.
stuff that is
I was
coming
just-
of age, so.
I was just wondering where are you gonna, for sure, if you wanted to do that this week, you'd have a little buffer on your
Yep,
budget.
and then by the time this project is done, I'd be able to sit down with Pam and know where that sits anyway, but then that would be a different question. This would cover the cost of the issue that was brought up, so.
Any other questions, Jeremy?
Do we need any action on this?
No, I don't think so. It's not
Nope,
asking for
and
money.
I talked to Becky, I actually talked to Mary and talked to Paul about where so there was no action needed on your part, this is more just informational, so. Yeah.
Thanks a lot. All right, now we have to confirm the next meeting date. Normally, it would be on, 7th, Labor Day, so what's your pleasure? I know there's highway on the 8th. Do you want to do it week before? Or law enforcement's on the 9th, personnel's on the 10th.
You do that, I can, the 8th or 10th, I'm open.
What was yesterday's decision on the healthcare center board meeting?
That is on the 3rd.
Trempealeau is on the 2nd.
Anybody got anything on the 8th or 10th? 8th?
8th is highway, we got highway.
Oh, 10th.
10th is
Personnel,
personnel.
bargaining.
Do you want to try our Friday again?
Is the first too early?
What day of the week is that?
Tuesday.
It's on a Tuesday.
I can do
Does that work? Will you be here on the first?
On the first, I'm here on the first.
That's P-TED.
Oh, they're meeting on that day?
What time do they meet?
They normally
They
meet,
meet at 8.
8:30 is normal.
How long do their meetings go?
That goes 2, sometimes beyond 2.
Yeah, it does.
I don't know, September's when they're planning on having it out at the park too, because normally it was August or September they had out there.
If you wanna do it on the 8th, then we can do it at 10:30. Nope, it doesn't work. She's shaking her head.
I believe there's highway on the
Highway
8th,
at 8th,
and
but-
I will be available.
Well, law enforcement on
What
the
about-
9th is at 10, right?
Yeah.
In the
I was gonna
past,
say,
it's
what
been
about
at
from
10.
8?
What if we
8
do
to
it at
10?
8
On which day?
on the 9th?
September 9th at 8
Yeah.
o'clock again?
Yeah.
The 9th. What day of the week is that?
Wednesday.
Wednesday.
At 8?
8. Yep.
Should I put that down for 2 hours?
Yeah.
Well, yeah, yes,
Even though
Mr.
we've
Chair,
never done 2
I think
hours.
that, we're gonna go for a record, go for
Just-
35.
Yeah,
Things
just-
that-
Yeah. Talk to Richard on that one.
Yes, that-
Sorry.
We're gonna take away his chair, then it'll have to be done.
Better cut his paper in half so he can only go so far.
I'm putting it down to 11.
So it'll be on the
Past performance.
9th then at 8
I
o'clock
put
in
it
the
down
morning.
8 to 11,
All right.
because otherwise I schedule something.
All right. The next one is convening to close session. Somebody want to make a motion to go into closed session?
Mr. Chair, I'll make a motion that we go into closed session for discussion and possible action regarding 2025 municipal underpayments to the county related and status of the 25 and 26 county accounts. This closed session item is pursuant to Wisconsin Statute 19.85, 1E, deliberating or negotiating the purchasing of public properties, the investing of public funds, or conducting other specified public business whenever competitive or bargaining reasons require a closed session, and parentheses C, conferring with legal counsel for the governmental body who is rendering oral or written advice concerning strategy to be adopted by the body with respect to litigation in which it is or is likely to become involved.
All right, thank you, Paul. We have a motion to convene into a closed session. Is there a second?
I'll second that motion.
All right, second. I think we have to do a roll.
I do.
Mary, can you?
Man, that's the best I've ever heard, Bob, just so you know.
Andy Todd,
I've never
Yes.
heard one
Richard
that good.
Anderson,
Yes.
Robert Becker,
Yes.
Paul Severson,
Yes.
Kevin Whalen.
Yes.
Yep, 5-0.
Mr. Chair, I'd like to make a motion that we come back into open session.
All right. We have a motion. Is there a second?
I'll second it.
We have a second. We need roll call?
No, but we do need
All
a,
in favor, say aye.
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 Opposed, same side. Carried. We're back into open session. All right, now will be a discussion discussion on items discussed in closed session.
Mr.
Possible action.
Mr.
Sorry.
Chair, I move that we have motion of waiver of interest of the 4 municipalities that are due to pay in money from taxes if they pay it within 30 days of invoice or with a repayment plan, so that the interest would be waived.
All right, we have a motion. Is there a second to that?
I will second that motion.
Second by Supervisor Todd. Discussion, any other discussion? Hearing none. Do we need to vote on that then, or is that?
Oh, yeah, we gotta
Yes,
vote.
okay.
And this is financial, so it needs to be a roll
Yeah,
call vote.
that's what I thought.
Todd, yes?
Becker, yes.
Anderson, yes?
Whalen, yes.
Severson, yes.
All right. Well, I think that concludes the meeting, and it is, I've got 12:23, and we will adjourn. Thank you, everyone.